FICCI's annual capital markets conference. Listen in.
About 11 or 12 quarters. And as you can see, for us, the important thing is not that there is pendency. In fact, pendency is good because it means that there is more and more activity in the market. But what we track like a hawk is the aging. So you can see that starting from March of 2022 to July, which was day before yesterday, end of July, what is the way in which we are working to bring the aging of applications down? And I had mentioned this the last time I spoke at this forum, that unlike the classical way in which a government system measures the time taken, which is normally computed from the date of receipt of complete information, right? And I'd mentioned then, I remember a lot of people laughed. I'd said that, you know, it's very easy for a government officer to reset his or her clock because when you're running out of time, you simply ask one more question. It doesn't matter what that question is. You simply ask a question and you get to reset your clock and say, I haven't received complete information. So in SEBI, we don't actually allow that. This data is from date of first application. So the whole process of streamlining this approval process so that we are able to facilitate faster capital raise, particularly when the markets are doing so well, it is very important for the economy, for corporates to be able to raise money at a time when markets are conducive. So really, the greens and the yellows you're seeing in the July are where we are comfortable because from date of first application, including all the interaction with the company and the merchant bankers, is where a bulk of our applications are. Anything exceeding 3 months, and we have 8 of those, is largely on account of either we don't have or the company doesn't have regulatory approvals yet in place, or that there is a judicial intervention, or that there is a significant non-compliance with regulations in the past. For instance, deemed public issue kind of violations in the past, which is resulting in those applications going beyond the 3-month number. What we have done, because it is important for us that troublesome applications do not block the entire system, so we have introduced a mechanism of return of documents. Now this is something which, interestingly, I was very amused to read in some newspaper that some market participant commented that, you know, SEBI can return a document even if, you know, the requirement of the document is in active voice, but it is in passive voice, and passive voice is active voice. I was quite amused to read that because in actual fact, the reason why documents are returned is the following. You can see here that where the observation letters have been issued, the number of 65 there, the documents returned 16. Imagine we could have approved 16 more documents, okay, or withdrawn, so another 20. So almost 30% more we could have approved, but what came in the way? What came in the way was that a director of the merchant banker was allotted shares in the company 2.5 months before the document filing. So he's directly conflicted, right? This is not active and passive voice of the document. This is because a director of the applicant company is already under investigation by SEBI for fraud in a previous IPO. This is not active and passive voice of the document. This is because the document has internal inconsistencies. Ek jagah number kuch aur diya hai, same number in another place is completely different. So even that much due diligence has not happened in a document where you have internal inconsistencies. You have documents where after days of reading the document, you can't figure out what is the company going to use the money for. Okay, this is not active voice and passive voice. We have large number of documents which are just incomplete. So the whole issue for us is we worry about that the applicants who are actually extremely diligent, who put up extremely good quality documents, and there are a large number of those, unfortunately get stuck in the queue behind the ones which have all of these complications. And we believe that it is not right, because we as a regulator are duty bound to process documents on a first come first serve basis, right? We cannot show preference for anybody. So the only mechanism we had which we could exercise was to say, if this is all because you are not able to move the document forward, problem is not in our processing. We will return the document to you so that we unclutter the path, and very good applicants who are waiting behind are brought in front and cleared as soon as possible. So it is exactly to facilitate faster processing of high quality documents that we are being constrained to return documents which have all of these fundamental issues, and I assure you we never return a document for active or passive voice of the document. Sunil mentioned about the rag and the bandish. I completely agree with him. And I think that the beauty of innovation often lies in the bandish. It's not that you're going to invent a new rag from somewhere. So we are extremely supportive of that. The only little bit of a problem we face sometimes is that what is presented as a bandish actually wo rag hi badal rahe. So they want to present it as one rag, lekin wo bandish laake wo pura rag hi badal dal rahe, which of course is something that we are very watchful about. But one of the innovations that you are going to see very soon, we've already taken it to our advisory committee, and I'm told that it got a very, very positive response, is a new innovation brought forward by the SEBI team, which is a combo product of a rights issue and a preferential allotment. Now, what this is going to achieve is something quite transformational, as I say, get the best of both worlds. So you get the best of a rights issue, you get the best of a preferential allotment. What does this mean? It means that, first of all, the entire end-to-end process can be completed in 23 days as compared to even a preferential allotment, which the industry loves because of the speed, takes 42 days. So this innovation is actually going to almost halve the time that you need, even as compared to the fastest route available today. So this is really an expressway which we are facilitating. Now, how is this being facilitated? Is because we are saying that for an existing company that is going the rights way to preferential allotment, there is really no need for SEBI to get in the way. Anyway, the company is there, it's a running company, it is making all disclosures. The only thing required is to say, what are you going to use this money for, which is hopefully just 2 pages. So there is no need for SEBI to come in the way at all. So we are eliminating the SEBI step. Then we are saying it's only a 2-page document saying why you're raising money, why do you need a merchant banker? So no compulsory merchant banker. So with all of these things, the whole objective is that we should now create this equivalent of Eastern Express Highway to be able to do fundraising in a way that is fast, cost-effective, and at the same time fully protects the investor, because it's the right way to a preferential allotment. So this combination product, which we will be taking to the board, PMAC has already looked at it? Okay, so we're going to bring out a consultation paper on this. So I think this is going to be a really interesting bandish, and we hope that you enjoy the variation. The second innovation, which is going to be coming soon to a cinema near you, is something that we're calling a demystified offer document. I'd just like to call out a comment that was made to me as I was walking from the main hotel over here. The CFO of a recently listed company said to me that when they started on the journey, they were really frightened, and everybody had told them that this is really a scary process of getting listed. And he says, having been through it, I don't think that is actually the case, right? So this is, I was delighted. I asked his permission to quote him. The point is this. I think the important phrase he used was, if you have nothing to hide, right? Is that what you said? If you have nothing to hide, it's really simple. Now, what is it we are trying to bring as an innovation to the market is something that we are calling a demystified IPO document, because we think too much mystique has been created around this thing called DRHP and, this whole process of getting listed. It actually isn't that complex. So what we are creating now, and always in consultation with industry, there's a working group that's working on it, is to create a template fill-in-the-blank IPO document which says, you fill in these blanks. If you have any complexity in filling it up, and there is an if, but, actually, and some complexity like that, there is a separate column there in which you articulate that complexity. Right? Now, with this, we believe that the document will be precise. There won't be a lot of unnecessary angrezi all over the place. It will be meaningful because it says here are the 50 things which are necessary for an investor to make a decision, and that's what it is. And any variation or bandish to the rag is explained separately. So it's like saying, I know this is the standard. Now anything which is slightly different, I have an ability to look at it. So first of all, it will smoothen the processing time in SEBI itself. We are hoping that we will be able to bring down the approval time even lower than where we have today. And at the same time, it will demystify the entire process of filing and going through a listing process. So we hope that this new demystified filing document will make life a lot easier for all the young companies waiting to list. Amongst the companies that have already recently listed, it's been an area of concern for them, and we've had a lot of discussion and learning as a part of approving those IPO applications in terms of the KPIs that we require loss-making companies to disclose in their document. Given that there was this concern and angst about it, we have now gone to the doctor with this. And that doctor, of course, is the Industry Standards Forum. So, I must acknowledge that this joint forum of FICCI, CII and ASSOCHAM, which was initially spearheaded by FICCI, so really many thanks that the entire startup of the forum was really thanks to FICCI. And of course, we have what is in SEBI referred to as the Sherpa of the forum is Mr. Sunil Sanghai. So he has no official designation, but he is the Sherpa. And the Sherpa is extremely important in getting us to the summit. So we have now referred this matter of KPIs to the Industry Standard Forum. And we have shared what are our concerns. And the industry has shared what are their concerns. And we believe that a very good win-win situation is going to come out and emerge from this very soon. I believe Mr. Mohandas Pai has said just another month and we should be there. So this is again something that through mutual discussion, mutual respect, mutual trust, we believe that there are solutions out there which are possible, so long as we ensure that we speak to each other in an environment of trust and in an environment where we are aligned with the larger objective of investor protection. Why are we so confident that this will work? Because, as has been mentioned earlier, the Industry Standards Forum has really worked for us. And we had started it on a pilot basis, and we recently took it to our board, the SEBI board, and gave them the structure that we are now going to be formalizing. So again, this will go into public domain very soon. We've taken that framework and we are again consulting with the Standards Forum to say, give us feedback whether you think that this framework works or not. So we will very soon be making this an integral part of the regulatory architecture, and the pilot status will move to something which is more formalized because we believe that it really works. It's worked amazingly well on the ESG norms. We now are expecting a submitted, about to come. All closed. I think the I's are being dotted and the T's are being crossed, and Mr. Mukundan has been really amazing in driving that whole initiative. So making it easier in terms of disclosure under BRSR. As we were discussing, under LODR, the disclosure norms under Section 30, signed, sealed, delivered, we're going to be taking it to our next board, September board, in order to get our approvals for that. So hopefully a lot of the debate, discussion around ongoing disclosures by listed companies should be hugely simplified through this process. The rumor verification that was talked about was the first major success, something that comes in the media. Is it a fact? Is it fake? Today the companies are regularly reporting, and of course the standards have now come into being. So again, making life a lot easier for listed companies. Apart from listed companies, the entire market ecosystem also has a large number of regulated entities, right? The intermediaries. So what we have been trying to do again is to ensure that the registrations of these are speeded up so they can get going with their business as soon as possible. You saw that there was, one is the pendency was a bit low, there was not that much activity. As you can see, just in the last 1 month, we have got 118 applications for new registration. So the entire industry is becoming so vibrant, and so much of, we hope, job creation is happening on the back of all of this. And we are working very hard to ensure that this is something which is again kept well under control. The last 4 that you're seeing there, the blue and the gray, is largely on account of the I think the ESG rating providers, because it was a totally new concept, and therefore the applications itself, when they came, were incomplete, but we accepted them because there was a deadline for their submission. So it's going to take time because the applications right now are actually incomplete, with our blessings. So the whole idea is that we should ensure that people who are coming into the industry, who are wanting to be a part of this ecosystem and create jobs in this ecosystem, are facilitated to get going with their business as soon as possible. Not only at the time of entry into the ecosystem. We have been very cognizant that the entire life cycle of somebody who comes under the purview of SEBI, their life should be made easier right through their life cycle. And in order to do that, we had set up 16 working groups, because we have very large number of stakeholders, right? You have the exchanges and the clearing corps depositories on one side, you have the brokers and DPs, you have the listed companies, you have the asset management companies, you have the alternates. We have a whole lot of different stakeholders, the FPIs. So we had 16 working groups set up for ease of doing business. Out of the 339 recommendations received, the total accepted number are 66. So 67% have been accepted. They are in various stages of implementation. 59 already implemented, September board of SEBI 126, and to be taken up maybe perhaps in the subsequent December board. So 2/3 already accepted. Of the rest, some are under process. They're still, we're trying to figure out what exactly we can do with them. And even out of the 16% that have not been accepted, you're seeing the big number is coming from debt and hybrids, because almost over a third of those 43 actually are not in our jurisdiction. So actually we should be in this slide actually removing them, because we have no jurisdiction over them. They come under the jurisdiction of either some government department or another regulator. So that number also, if you see it, would actually come down. So this is where we are, and we track this very, very carefully. So the idea is that right through the life of the entity who comes under our jurisdiction, there should be ease of doing business, and we should ensure that we are accountable for what we are doing, and wherever we are not accepting, there is a specific reason that we articulate as to why we are not accepting something that the industry has requested. And this is our transparency to say that this is our open report card, this is what we will show and disclose, just as we ask for transparency from the rest of the industry. This was actually meant to be in lighter vein, that while we try and make your life a lot easier right through your life, in case there are violations, we are trying to make settlement also easier. So when we do catch you doing bad things and we allege violations, we want to make sure that it's just easier for you to come. We have a calculator sitting on our website. You fill in the blanks and you know how much is your settlement amount. And so even the settlement amount, we want to make your life a bit easier in concluding that. When we talk about the Industry Standards Forum, I would like to highlight that the first actual Industry Standards Forum that was a success was the one with the mutual funds, which was really through AMFI. That is what inspired us to set it up for the listed companies. And we subsequently set up a large number of other industry standard fora as well. And the amazing success, if I look at the brokers, the three large broking associations came together, Kamlesh Bhai is smiling, came together, and I can't tell you with what passion, with what maturity, and with what, balance. The forum has sifted through over 100 suggestions on bringing the standards, and there has been, I think, almost 24 which are already, recommended by them. A large number of those, I think more than 50% or 60% are implemented, and the balance are under various stages of active consideration. But I think what I would like to point out is every Saturday, senior people from the industry, every Saturday they would meet for 2 to 3 hours to have discussions, and the following Monday they would have discussions with the exchanges and clearing corps, and the following Wednesday they would come and talk to us, and item after item and such sensible suggestions I cannot tell you. I mean, it was like we used to look at it and say, अरे ये पहले हमको feedback आ जाता तो हम पहले ही कर देते. I mean, they were just so sensible. Okay, so I would really say that to us, this process of the Industry Standards Forum across the spectrum has been such a learning experience for us, and we are so delighted.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching the Small and Mid Cap Show. I'm Harsaita. With me is Rucha as well. We'll go to Redington in just a minute, but let's quickly have a check at where the Nifty 50 is at, around 0.8% lower on the Nifty. There is certainly some bit of pressure, but we're largely range bound. So that's one possible positive after a very negative global sentiment. We've not really reversed in a very large way. But let's bring on board Mr. Ramesh Natarajan, CEO at Redington India, to talk to us about Q1 FY25 numbers and what can we expect from the full year. Welcome first off, Mr. Natarajan. Sorry we've had to delay a little bit, but welcome, good having you. First off, want to understand from you what slightly muted on the growth front. What can we expect from full year FY25? What can the expectations, aspirations be, and how do you assess Q1 as a whole?
Q1 has been good from a larger performance perspective because that has been our highest ever revenue that we have gotten so far. But if you look at the seasonality, Q1 has always been fairly silent, and more so from this quarter where we had the code of conduct and from an election perspective that had softened a lot of projects and delay in closures on that. And a couple of our market mixes also had a drop in terms of the revenues, but otherwise we had growth markets doing well, including India, KSA, and MEA. As it has got to do with the product mix as well as the geo mix, maybe Q1 always is a little subdued on growth. But however, moving forward, we do see the notebooks and the PC business obviously coming back after a big tech refresh from the COVID, giving us a fair amount of growth opportunities. We also look at mobility with a fair lot of new product launches that are planned out for Q2. That could be a great growth opportunity. We also see markets coming back on projects and enterprise orders and government deals that would probably help us moving forward, apart from a good lot of data center growth that are happening in the markets that should give us a good upside as we move forward. But otherwise, Q1 has been its characteristics, but we see definitely a good positive growth opportunities moving forward.
Right. Thank you for that, Mr. Natarajan, Rucha, Somaya, this side. I just wanted to ask you about the margin range which you've guided for around 2.3% to 3.5% in terms of EBITDA. In terms of profit margin, you've guided around 1.3 to 1.4%. So what are the margin levers, number one? And number two, what kind of margin range for the long term do you expect? Do you expect it to remain in the lower single digits?
No, I think we should be, if you have been looking at our statistics for the last many years, I think we have been greatly managing at about 1.3 to 1.5, and we would expect ourselves to continue having that from a PAT perspective. Gross margins has got a good element of product mix that we have, the geo mix that we have, that has been well characterized over the years from the growth markets, emerging markets, and the geo expansion that we are looking out for. Between the categories that we have, which has PC printers on one side, we have mobility as the second division, and the third is on enterprises. All of it has its margin mixes. Some part of it has been a little muted this quarter, largely owing to some slowdown in some markets due to certain Q1 characterizations, plus governments probably coming out from the new elections perspective. Some spends have been muted, but otherwise we feel the next part of the year should be having a fair amount of growth. As I said, PCs are looking out for a tech refresh, and the Windows 11 that's coming around will obviously strive for more. AI PCs are a good trend to look for, and with a lot of GPU data centers that are coming by, a lot of enterprise sectors that are getting more digitalized, more startups and scale-ups are obviously coming up to be a little higher in its performances. Mobility launches and the new products that are expected to be will continue to keep our gross margins in play, and I don't think we should look for any muted gross margin or the PAT percentages for us.
Right. One last question from our end. In terms of revenue from hyperscalers business, do you expect the slowdown, say, for example, in terms of Microsoft, right? Pretty muted numbers this quarter. So will that kind of weakness in the hyperscalers business affect business at our company?
We have been doing a good growth on hyperscalers at about close to 35%, and we expect that to continue. If not for the same ranges, it will still be at about anywhere between 28 to 32. That would not get muted. The adoption of cloud between public and private and hybrid is only getting better year by year. So I don't find the cloud business can only be contributing more. With its current percentages, it's only growing up. And we expect a lot of services or workloads around the cloud can only be more growth oriented.
All right. Thank you so much, Mr. Natarajan. Apologies, we had to cut short this conversation, completely out of time on this one. But thanks so much for giving us that perspective, joining us. Completely out of time on this one. It's time to wrap the Small and Mid Cap show, at least today, truncated one. But staying true to the name, Indiabulls Housing Finance has now shifted or named itself is now Samman Capital. Jio Samman se, keep watching NDTV Profit.
whole day passes like a blur. The news just whizzes past. And you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome to NDTV Profit. I'm Harsh Saita. You're watching Ask Profit, a show where we get you all answers to all your stock-related queries. And we'll have our fundamental as well as technical guests joining us today to answer all of those questions. Any questions, do drop it on the number below. We have a WhatsApp number flashing there for you. Drop the question to us. Give us pretty much all your details, purchase price as well as quantity, to help us help you better. All right. Quick check on where the markets are at. You're seeing the Nifty 50 down around 0.8 odd %. So there is some bit of pressure, but it's off the day's lows. So that accentuated pressure at the start of the day may be seeing a bit of recovery. We are above 24,800, but we are fluctuating nonetheless. It's a very range bound market. 120 odd points is the band in which the Nifty 50 is trading at. Let's pull up the contributors, and there you'll see HDFC Bank single-handedly aiding the positives. You look at all of the other positives, pretty much all the others combined contributing to less than 10 points, HDFC contributing to nearly 50 positive points on the Nifty 50. Where the negatives are concerned, or the losers, the negative contributories, you're seeing ICICI, Reliance Industries, all the heavyweights coming and pushing on the index lower. You have 200 points down now on the Nifty 50. So that's currently the texture of the market. In terms of where the small and mid cap, where the broader markets are, let's pull up the advanced decline to just get a sense of what's happening with regard to the breadth of the market. The mid cap index, of course, down around 0.6 odd %, but the breadth not as bad. We're seeing, of course, some bit of negative on the breadth, but not as bad as one would think of it when we saw how global Qs have come through. So that's currently the texture. Of course, specific names buzzing, but let's pull up. If we can quickly pull up the sectoral heat map, see which sectors have been buzzing. The Nifty Auto down 2.1, 2.2 odd %. So that one's under some real pressure. Metals also under pressure, second consecutive day. And you're seeing realty stocks also under pressure along with PSU banks. So plenty of sectors under pressure, IT too. One of them. The only couple of ones which are not seeing as much pressure, you're seeing the pharmaceutical, Nifty Pharma, doing decently on an otherwise tepid day of trade. But one stock which is in focus, and among all of the others that we'll discuss through this show, is Zomato. Of course, very strong numbers. Blinkit really pulling its weight for Zomato. Let's try and first break down those numbers, understand what brokerages are also perhaps saying, why this level of positivity, 12% higher. In fact, intraday it was up over 18%. We go across to Mahima, who's going to break that down for us.
Right, Harsh. So you're absolutely right. Stellar set of numbers for Zomato in Q1 FY25. Just to break down the numbers, revenue is up 18%. EBITDA has significantly improved from that 86 crores to 177 crores, and net profit is up 45% QOQ. Now, overall, if we see the highlights, the food delivery business has grown around 12% QOQ and around 45% YOY. And when we talk about the quick commerce, that is Blinkit, it has grown around 23% quarter on quarter, and it's grown 2.5 times as compared to FY24. Now, quickly about what brokerages are saying. Well, brokerages are pretty bullish on Zomato. The target prices range between, from 270 to almost 350, and poses an upside of 17% to 47% from yesterday's closing. Well, City on Zomato, well, it's posed a target price of 280. What it's saying is that it's yet another stellar quarter, and they've raised their gross order value estimates for food delivery by 1 to 2%, and for Blinkit by almost 18 to 16% going forward. What they're saying is that gross order value growth will be 20% for food delivery and 50% plus for the quick commerce business, and overall EBITDA growth of 55% CAGR is what they're expecting over FY25 to 27 estimates. Well, Nuvama is also bullish on Zomato, given a target price of 285, upside of 20%. They're saying that Zomato continues to deliver its promise of strong growth, and management is not dialing down on its growth ambition, as the management has guided that they will open 2,000 new dark stores by the end of calendar year 26. And what Nuvama is saying is that they now value the food delivery part at $14 billion and Blinkit at $13 billion. Axis Capital again is bullish on Zomato with a target price of 287. What they're saying is that they're raising the FY25 to 27 estimates top line by 7 to 12%, and they believe that Zomato execution is best in class. Lastly, CLSA has maintained outperform for Zomato and target price of 350. Now, this is the highest target price on Zomato, and they believe that it is clearing out competition in every which way for any other players in the industry. So this is the overall view of what brokerages are saying about Zomato and how Zomato has performed.
All right. Thank you for that, Mahima. Let's go across to both of our guests. We have G. Chokalingam, founder and MD at Economics Research, and we have Ayush Mehta, technical research and analyst at Nirmal Bang. Let me come to you first, Mr. Chokalingam. Talk us through what your key takeaways from Zomato are. Would you significantly start to see upside even from these levels? Mind you, Zomato at one point of time was trading at 40 rupees a share less than 2 years ago, currently trading at 260. How do you look at valuations as well as the numbers? Give us your perspective.
Yeah, certainly. I mean, I am always a conservative in nature, and that punishes me also in the market, but I am still not changing my conservative approach. As you rightly said, the stock from 40 rupees to 260, it's almost nearly more than a 6-fold jump, in a couple of years. Fine, that is not a major cause of concern. Now, it is trading at a trailing P of around more than 200 PE. Assume that they maintain 100% growth in revenue, 100% growth in profit for next 3 years. Even then, the PE ratio in the third year will be 54. We have seen, very difficult to grow business consistently 100% year after year, because the beauty of arithmetic limitation also will start playing out. That is a base effect. So net to net, I find it difficult to give a buy call at this price.
Okay, right. So be conservative is the view coming in from Mr. Chokalingam with regard to Zomato, but clearly stock flying away in trade today. Let's quickly shift focus to queries. I'm going to take the first one. Ramesh Prabhu from Mumbai holds 750 shares of RVNL at 139 rupees a piece. Mr. Chokalingam, let me come to you, because what he's asking for is, should he continue to accumulate this?
No, I would not suggest accumulation. He can hold on to it. If the stock rises further, he should book profit, because valuations are quite stretched.
Okay, Ayush, let me come to you. So first off, welcome. Secondly, we have Riddhi Jain, who's holding 500 shares of HUDCO at 343 rupees a piece, asking whether she should hold or she should sell HUDCO.
Well, Hudco has shown some good rally from 218, 220 levels, and it went all the way to 350 levels. One of it has retraced a bit from the higher levels. I would recommend to put a stop loss here. 292 is a very strong support zone for this stock, which is 50-day moving average. As long as it is holding 290, you should definitely hold it. But once the 290 is broken on the closing basis, then definitely you should exit from this stock.
Okay, so 290 is the number he's looking at, Ayush is looking at. Mr. Chokalingam, we have Vinod from Chennai holding 100 shares of Jio Finance at 332 rupees a piece. Wants your outlook from a 2 to 3 year perspective on this one?
We have a coverage, we have a buy call, and we consider this Jio Financial as one of the most high conviction stocks in our coverage for simple two reasons: that it's a part of Reliance Group, and Reliance has never gone wrong in creating a new vertical and growing the size of the business. Second, on the valuation, it is trading at around 1.6 times book value if we consider the market value of Reliance shares held by Jio Finance. And I believe that it will become one of the biggest financial service industries firm in the 3 to 5 years. And I believe that it can be a multi-bagger in 3 to 5 years, purely based on the valuation and the reputation of the promoters. And hence, I would give a strong buy recommendation on Jio Finance.
Understood, Mr. Chokalingam. Now we have Murthy from Vijayawada holding Infibeam shares. Ayush, I'll come to you on this one. He's holding Infibeam shares at 31 rupees a piece. Wants to understand whether he should hold or sell.
Well, Infibeam is consolidating from quite some time now. It is following a range of from the higher side is 33, 34 rupees, and the downside is 27, 28. The thing is, it is on the downside right now. It has taken the support of its 50-day moving average in today's session. So minimum we can expect 33 rupees in that stock in the coming down. But around 33, 34, you should exit this stock.
Okay. Mr. Chokalingam, we have Ravi holding 1,000 shares in Tata Steel at 174 rupees a piece. Wants to understand outlook. My guess is from a medium to long-term perspective. Commodity play down maybe 10% from his buy price.
If he is willing to hold for 2-3 years, he can hold. Otherwise, in the short to medium term, I find more stress for commodity plays. We have seen last couple of months tremendous pressure on the realization on the entire basket of metal and steel products. So therefore, if he's a short-term investor, it's good to sell. If he is willing to wait for 2-3 years, definitely he can hold on and he can accumulate on declines.
Understood. I want to quickly stick with you, Mr. Chokalingam. Jay Shah holding 50 shares of Adani Ports at 900 rupees a piece. Of course, he's making a decentish profit on this one. Wants to understand your outlook from the longer term.
For long term, he can hold. Definitely, there is a lot of potential from port business. If he's willing to wait for 2-3 years, he can hold on to it.
Understood. Okay, we are going to slip into a very short break. On the other side, we'll continue to take your queries. So stay tuned. You're watching Ask Profit on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. Thanks for staying tuned to Ask Profit. You can continue sending your queries on the number flashing at the bottom of your screen now, and we'll try to take as many as we can. Let me go back to Ayush. Ayush, we have Prabhu from Tamil Nadu holding 1 lakh shares of NCC. I'm not sure if I'm reading that right, but at least that's what he's suggesting. At 356 rupees a piece. Should he hold, sell? What should he do at this point?
We're talking about NCC. NCC has given a tremendous breakout over the years, forming a good higher top, higher bottom formation, and currently even in this market, it is holding itself well. So I think NCC should definitely hold. The minimum targets I'm seeing here is 375 for NCC.
Okay, let me go across to Sivaraj from Pondicherry. He is also holding around 2,000 shares of BEL at 330 rupees a piece. Ayush, your views with regard to BEL from a hold or a sell?
We're talking about BEL. It has broken the 50-day moving average in today's trading session. So as long as it is holding 300 rupees, we should keep it as a stop loss. 300 should be the stop loss. Once it is closed below 300, then definitely should exit from here. Any fresh rally in the stock will be seen only above 325 levels.
Understood. Mr. Chokalingam, we have Srinu wanting to understand your outlook with regard to Yes Bank. Just give us a breakdown, because the stock has seen a bit of a rally. There is, of course, the SBI stake sale also, which is coming into play. So there are plenty of moving parts here. Just give us your views from a medium-term perspective for Shrinu's benefit.
Certainly, it's a hold. And if it keep declining from current level, definitely one can buy for a couple of reasons. Even if SBI sells, I'm sure there will be a lot of takers for this bank stock because there is no depth of demand for all these big sales coming in the market we are seeing in the recent time. And fundamentally also, the bank has improved the quality of assets in the last 2 years. And in terms of valuation also, it's around 1.4, 1.5 times price to adjusted book value. And therefore, it's quite attractive. So if it falls, one can definitely accumulate for medium to long term.
Okay, Ayush, can I come to you with regard to the technical view on Yes Bank? Because this one has a lot of investor interest, and 2, it's quite a big mover on most days.
Well, talking about Yes Bank it definitely formed a good base from last 2-3 weeks. Now we are seeing some selling pressure at 28 rupees level, approximately around 27 to 28 rupees. So that's the big resistance zone for Yes Bank. Yes Bank is currently forming a penny pattern formation. Once it crosses 27, again, it's going to be a good rally in Yes Bank, which can take it again to 30-32 levels here. The downside support for Yes Bank is currently placed at 24 rupees. There is one disclosure. Me and my family is holding Yes Bank for the long-term portfolio.
Okay, thank you for that. Mr. Chokalingam, let me come back to you. Your outlook with regard to Titagarh. Now, this stock 45% up year to date. When I'm looking at the 1-year chart, it's been blockbuster, 132%. So I want to understand from you both on valuations as well as on the future growth potential and execution for something like a Titagarh. How should one look at a stock like this now?
It's a good company, no doubt about it. Track record is good. But is it a good valuation? I have my own doubt. And secondly, the railway capex also is expected to grow only in a poor single digit. That would be slightly negative for such companies. So therefore, I would give sell call on Titagarh Rail.
Sell call on Titagarh Rail. That's a query asked by Sujata Shinde. Let me move on. Anil Chaudhary from Mumbai holding 256 shares of Birla Soft at 726 rupees a piece. If I can come to you, Mr. Chokalingam, he wants a slightly longer term outlook from you on Birla Soft, because this one, soft set of numbers and has been under pressure since the last few days.
Yeah, it's a good company, no doubt about it. But if I always look at two ways, the mid-sized IT companies, because a lot of mid-sized small companies were taken over in the last 10 years. And so I look at the enterprise value to annual revenues. So I'm normally comfortable if it is around 2 times. Similarly, the P ratio. So in both perspectives, the Birlasoft even at this price doesn't have valuation comfort. I would rather recommend a stock like Axelia Solutions. It trades around only 20-21 PE, and it is held by the world's largest private equity fund. And these funds are known for creating value addition in their own benefit, because normally they don't become a permanent promoters of any company which they take over. So therefore, my uptick is on Axelia instead of Birlasoft.
Understood. Anil, I hope you found that valuable, because Birlasoft may not be the option, but you've got an option in Axelia Solutions. There you go. Now, let me shift focus to something. Let me shift focus to the technical side on Birlasoft actually. Let me come to you, Ayush, because we've seen a 15% fall in the stock price in the last 5 days where Birlasoft is concerned. How is this looking on charts, and what levels should Anil monitor?
Well, Birlasoft is looking weak at the chart currently. We had initiated a sell call on Birlasoft on 31st at around 700 levels. Initial targets was 670, which we had achieved also. But the charts are not looking very positive at the moment. The big support zone for Birlasoft is currently placed at 580 levels. So any bounce back is expected is at around 580 levels only. So I think you should exit if the holding is shut down.
Okay, Ayush, I'll stick with you. Venugopal Reddy from Hyderabad wanting to understand whether he can make a trade in Union Bank from a shorter term perspective. So how is charts for Union Bank looking?
Well, Union Bank charts are not very attractive at the moment. It has broken 200-day moving average and there's no sign of reversal. A small 1 to 2 rupees rally is fine, but I don't see any good trade here at the moment. So Union Bank is an avoid right now.
Chokalingam, we have Rajiv from Bombay wanting to understand long-term outlook on Jindal SAW.
A great company, no doubt about it. One can hold on to it for next 2-3 years.
Okay. You believe that growth prospects look good, valuations also look good. If you can just give us some perspective, if at all, Mr. Chokalingam.
Yeah, valuation, 8 out of 10 small and mid-cap stock, it's not there at all. But then if you look at it, you keep missing the opportunity. Slightly stretched, but then, definitely this pipe company has done phenomenally well in the last 5 years. So therefore, PE will shrink in next 2-3 years, and definitely it is good to hold.
Okay. Let me switch focus to you, Ayush. Ramakrishnan holding 500 shares of IOB at 68 rupees a piece. Wanting to understand from you whether he should hold, sell, what should he do with it?
IOB is holding at 168 rupees a piece, but it is currently around 65 rupees. Well, the thing is, it is consolidating from quite some time now. So I would recommend to put a trading stop loss of 60 rupees. If that is crossed, then definitely should exit. Above 68 rupees, this is going to be a good rally, which can again take the stock towards 75 to 80 levels.
Okay. Mr. Chokalingam, I'll switch focus to you on the fundamental side. Narsimha from Hyderabad holding 7,993 shares of Varun Beverages at 859 rupees a piece. Long-term outlook is what he wants to understand from you. Should he continue to allow this compounding story to continue to play out, or should he start cutting down?
No, definitely, it is a great growth story for long term, no doubt about it. If he's willing to wait for 2 to 3 years, he can hold. Otherwise, if he's a short to medium term investor, he can sell it, and possibly if the stock falls even 10%, he can buy it back.
Okay, now the next one is very interesting. I'll stick with you, Mr. Chokalingam. We have Saravanavasan from Madurai. I apologize for that slightly complicated name. Now holding around 23 shares of HAL at 4611 rupees a piece, so 4,611. It's a tough one because HAL has risen to those levels of 5,700 and then come off. What do you expect from a longer term perspective, both from a valuation as well as from a growth perspective? Mr. Chokalingam, please give your insights on this one.
The long-term growth is already captured by the price. That's my strong view by HAL. I think he bought at a wrong price for long-term. The investors who are losing, definitely they can hold on. And once possibly if they recover the cost, one can exit HAL.
Okay, so exit HAL, but what is a good entry point then, as per you, in terms of valuation comfort?
See, there are many, as I said, I'm a little conservative. I don't compromise too much. I started compromising on the valuation at margin. We are forced to, but I don't want to compromise fully. So from that perspective, in PSU space, I would give two stocks. One is a Coal India, the other one is a Balmalari company, where in Balmalari company, we have also invested. These are the two PSU stocks I find amazing. Coal India got a graphite mineral mine. And also there was a proposal as per the media sources to list two subsidiaries engaged in coking coal and research services. So they would be valuation accretive, and it is trading at 8 PE, Coal India, and also 5% dividend yield. So, and definitely for next 10 years, their demand for coal is going to be robust. So this is one of the best stocks in PSUs according to me. And Balmalari company is a logistic company, still trading at 17-18 PE. I am surprised the way it is trading at 17-18 PE. Cash rich company. It has got a joint venture in UAE, which is doubling the profit every 3 years. And it's a huge assets because it is more than 150-year old. It has got logistic infra assets in the country, which are very huge. So considering all that, I find Balmalari in the small and mid cap space, Coal India in the large cap space as the best two PSU stocks in personal view.
Okay, so speaking of PSU, speaking of power, we have Rajesh who owns 300 shares of Ireda at 270 rupees a piece. Mr. Chokalingam, your advice for someone like Rajesh who's holding Ireda at 270?
My research, we will sell on Ireda and buy stocks like Coal India.
Okay, so that's your advice. Thank you so much, both of you gentlemen, because we are out of time on this one. Thank you, Mr. Chokalingam. Thank you, Ayush, for joining us. And, completely out of time on this show from myself and everyone who puts the show together. Thanks so much for watching. More on the other side. Stay tuned to NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target?
welcome. You're watching Hot Money, and it's not a very interesting Friday afternoon. The markets are under some pressure on back of weak global cues. A weak handover from Wall Street led to Asian markets selling off, and D Street has followed suit. We're sub 25,000 today, in fact, trading closer to levels of 24,800. It's volatile and remaining to be in that range as we see it. The breadth of the market is also quite weak, and there's been no significant recovery after what we saw in early trade. Well, in terms of what we see on top terms of movers this afternoon, afternoon, you've got 40 stocks that are trading lower. You've got 10 counters that are trading with a small positive bias. Surprisingly, HDFC Bank is up 2% today. Kotak Mahindra Bank is trading marginally higher. Dr. Reddy's, Asian Paints and Adani Ports are some of the few gainers in early trade. Well, on the sell side, Maruti is down 5%. So autos are taking it to the chin on back of disappointing monthly sale numbers. Tata Motors reported earnings that were better than the street was expecting, but the markets don't seem pleased. Tata Motors also trading weaker. Eicher, Tata Motors and Maruti make your top three losers in trade this afternoon. Metals aren't doing well either. So apart from weak global cues, the fact that there could be a retrospective royalty that some of these metal majors or miners will have to pay is leading to a sell-off on the likes of a Tata Steel and Hindalco. Tech is looking weak as expected. ONGC also trading with a negative bias. Across the broader markets, the picture is pretty much the same. The Nifty 500 trades with a cut of 0.7%. Your biggest loser is Cummins India, down 8% from the get-go this morning. Imami is trading down 5%. Birla Soft, Escorts, Capri Global, 361 WAM are some of your top losers in the trading session. Well, on the winning side, the day for good reason belongs to Zomato, 12.5% higher. It already got a gap up this morning, was higher by 7%, peaked somewhere around 11 o'clock and continues to trade higher with a gain of 12.5%. Numbers were good, brokerages are enthused, and it generally seems like targets of 280 to 320 are doing the rounds on Zomato. But Mahima is standing by with more on that. Mahima, this has come out of nowhere. I still remember last quarter when Zomato reported earnings. The street was disappointed. The stock was languishing at 150 to 160. What a stark difference in this quarter. What's worked for them? What's changed?
Right, Samina, so basically it's a stellar quarter for Zomato, and overall if we see, revenue has grown 18%, EBITDA has significantly improved from that 86 crore mark to that 177 crore. Margins have doubled from 2.4 to 4.2, and overall if you see, net profit has grown 45% QOQ. Now this is of course numbers QOQ. A couple of things, the food delivery business has posted a growth of 12% QOQ and almost 45% YOY, and Blinkit, which is the quick commerce, has posted a growth of almost 45% this quarter, and overall if we see, it is YOY, it has grown over 2.5 times. So I think Blinkit is something that is auguring growth for Zomato, and which is why Zomato has turned profitable as well in the past 4 to 5 quarters. Overall if you see, other segments are also doing very well. Dining out vertical also swung into operating profitability this quarter, and food delivery contribution margins have slightly declined. However, the overall margins of the other segments have held the margins high. Now in terms of monthly transaction users for quick commerce, that is Blinkit, it has grown more than 100%, and for food delivery it has grown around 16%, and gross order value for food delivery has grown around 10%, and for quick commerce it has grown around 4%. Now management has guided that they are confident of doing the 20% growth on food delivery, and overall they're planning to add around 2,000 dark stores, which is at present 639 by calendar year 26. So this is roughly overall reasons why Zomato is zooming in trade today.
And that big launch, Mahima, of District is also going to be something that could potentially generate the delta for Zomato from here on. But what do brokerages think? Where is the excitement, and what are the target prices during the rounds?
Right, so I mean, absolutely. So brokerages are pretty bullish on Zomato. The price range is between 270 to almost 350. So that's, the upside is ranging from that 17% mark to almost a 47% mark. To start with, Citi on Zomato, it's given a target price of 280 and it remains their top pick. What they're saying is that they've raised their gross order value estimates for food delivery between 1 to 2%, and same for quick commerce between 16 to 18%. They have also raised raised the CAGR growth for food delivery in gross order value by 20% and 50% plus for quick commerce, and overall EBITDA CAGR growth they are estimating at 55% over FY25 to 27 estimates. Nuvama is also bullish on Zomato with a target price of 285. What they're saying is that they're now valuing the food delivery business at $14 billion and quick commerce at $13 billion. Axis Capital again is bullish on Zomato with a target price of 287. What they're saying is that they're confident in quick commerce and they raised the top line estimates by 7 to 12% over FY25 to 27 estimates. And lastly, CLSA has maintained outperform with the highest target price so far amongst all the brokerages, which is 350. They're saying that Blinkit saw profitability improve despite a rapid acceleration in the dark stores. And what they're saying is that food delivery also in the middle game, but at a strategic edge. And they're raising their earnings estimates by 6 to 36% over FY25 to 27 estimates, and target price is equal weighted blend of DC and of FY26 PE, and higher multiple for Blinkit and food delivery and higher earnings for both is what the brokerage is estimating. So this is the overall view of what brokerages are making on Zomato.
Thank you for that, Mahima. It's had a good run. It's had a very, very solid run. In fact, in the last 1 month itself, the stock is up 26%. Gaurang Shah joins in now with his view on some of these counters that are buzzing in trade. Gaurang, let's start with Zomato. This, for good enough reason, is the stock of the day. 12% higher, 25% for the month, and a stark improvement in earnings from what we saw in the previous quarter. Looking ahead, do you feel like there's still some more room and steam left on Zomato?
Well, Samila, first of all, it's good to interact with you after a long time. And
extremely long.
Thank you very much for having me on the show, and good noon to all of you all. So, Zomato has a history of its own. And if I am not wrong, and I stand to be corrected if I am, the IPO price for Zomato was somewhere close to about 76 rupees. After listing, the stock gained to the heights of about 140 plus, and then it corrected because of numbers were not in line and there were concerns as far as the growth is concerned. The stock actually slipped below the IPO price. It made a low of about 50 to 60. So when the IPO was there, we had recommended a subscribe from a long-term point of view. After the highs that it saw, we advised the profit booking. Again, we initiated a coverage on Zomato somewhere around 60 odd rupees. And we are maintaining a positive coverage on Zomato as of now. I think what has worked for Zomato was in line with what our estimates were, and that was the contribution from Blinkit. That is the daily provisioning platform that they are actively into. So on Blinkit, even if you are a gold member of Zomato, you have to pay your delivery charges along with platform fee. And on Zomato Gold, that is the food delivery platform, they have recently increased the platform fee. It started from 2 rupees. I think now it is somewhere close to about 6 or 7. So that has contributed to a great extent on the numbers that we are witnessing. And I'm quite sure going forward, the kind of activity in terms of food as well as provisioning delivery platform is concerned is going to be at a much elevated level. Along with this, Samina, they have been very active in terms of, the app interaction as far as the customer is concerned, and they've added some new features also. So we maintain a positive stance, and I think if this is the run rate, then going forward, Blinkit could do wonders in terms of contribution for Zomato.
So it is going to be all about Zomato. You're right. It's had, very diverse calls in the last few months, but the stock has held out and the earnings are now reflecting that too. Tata Motors is another one in focus this morning. This time around, the numbers were pretty solid. JLR has done well. The outlook is positive, but the general sentiment around auto and auto sales is impacting the counter. Varsha is standing by with a quick breakdown of the earnings and the key takeaways, and of course then we get a perspective from Gaurang as well going. Varsha, today's sell-off is not because of the earnings, right?
Well, Samina, thank you for that. But few things actually, if you see, profit did beat estimates, but there are few things which is actually working against the stock. First, let's see how the earnings were. If I want to, do segmental review of the earnings, for JLR revenue rose almost 5%. So optical beat on EBIT on lower depreciation, although EBITDA was in line. Now, one thing which stood out, which was against JLR, is they are anticipating near-term production issues at JLR in Q2 and Q3, but they retain guidance on EBIT, which is more than 8.5% and net cash balance sheet. Also, order book for JLR reduced to 104,000 units from 133,000 units in March 24. If you see that their passenger vehicle business, their revenue declined was due to decline in its EV volumes and its overall volume. So if you see EV volume decreased sharply by around 14% due to sharp decline in fleet segment, and EBITDA margin expansion was driven by cost reduction efforts. A weak top line led to its EBITDA margin to decline. When it comes to commercial vehicle business, revenue growth was driven by robust volume growth, and expansion in margin was led by better mix and realization. Now, two things. One is issues in production issues in JLR. Also, if you see auto numbers, July auto numbers were not that quite good for Tata Motors, and I think these are the reasons that you're seeing pressure in the stock.
Right, and of course, the general sentiment around auto sale numbers disappointing the street is not helping Tata Motors. Gaurang, what did you make of Tata Motors' earnings? JLR has come to its rescue, and the commentary didn't seem too disappointing in my mind, but the stock has got a thumbs up, and I'm assuming it's because of the general sentiment around auto stocks today.
So, Sabina, one thing that I would like to say over here, and especially to the viewers of NDTV Profit, that out of 12 months, one cannot expect a continuous 10-15% increase as far as the month-on-month sales number is concerned. And this month-on-month sales numbers, they gradually starts going down when you are approaching year-end, especially in the month of November, December, because that's the calendar year change, and nobody wants to go and buy a vehicle at that point of time, because soon in a month's time, your vehicle will be 1 year old. That's the kind of mentality and thought process in terms of approach. For Tata Motors, again, a disclosure, we are maintaining a positive coverage, that is the buy-side coverage on Tata Motors. For JLR, Sabina, what our thought process and what the commentary from the management was that they are slowly, steadily shifting the production lineup of JLR into their Sanand plant in Gujarat. I think once that is completed, you are going to have a lot of cost efficiencies coming in, wherein there is a possibility that the prices might also come down and affordability might be a big thing. This is a knee-jerk reaction on the month-on-month numbers. Of course, the companies mentioned about two verticals. One will be catering onto commercial vehicle, and the other will be focusing on passenger vehicles, EVs, and JLR. So you might have value unlocking also taking place, and that will possibly build up a strong strategy in terms of synergies involving going forward from here on. So a knee-jerk reaction, if you are in for long term, continue to hold on. And if you're looking to invest in Tata Motors at correction, I think start at current levels and you will possibly get dips to add on.
Interesting. So Tata Motors constructive call coming in from Gaurang. One space in the market that seemed to be aggressively on the buy side was metals yesterday, on back of that expectation of a rate cut coming in from the US, and of course a weaker dollar always garners well for metal stocks. This morning though, the picture is very different. Of course, what we also heard yesterday is royalty payments that have to be kept aside with retrospective effect, which could impact miners such as a Tata Steel. Gaurang, how does one play the metals pack? It's been struggling, to say the least, and it's been a contra call on a number of portfolios for quite some time now. But every now and then, when you think that they've got it together and the rally could, sort of extend, there's bad news. And this time around, it's a royalty payment in India for miners. Anything in the metal space that looks good? Would it be a sector you're overweight on? Would you avoid it for now?
Well, I wouldn't say avoid, but it's possibly a 1.5 2 year kind of time horizon if you're looking at investment into the entire metals, ferrous, non-ferrous. That is, and along with the domestic news flow, Samina, what happens is that news from China has its own impact on the metals pack. On positive news flow, you have a good positive bump up, and on a negative side, you have a decline. I was reading a report. I stand to be corrected if I read it right, that China is going to import its problem as far as whatever excess capacity they have and possibly, ship a lot more than what they have been doing. Now, this will also make government policies into an active mode in terms of anti-dumping duty and import duty being increased. If I look at the positive side, infrastructure is a great theme that the government has rolled out. Even in this budget, the Honorable Finance Minister has given out a decent budgetary allocation for infrastructure creation. And two commodities you need, Samira. One is cement, other is metals. Without this, you can't make a durable and a strong infrastructure. So maybe on the news flows, we are seeing a little bit of nervousness, but from a long-term point of view, consumption-driven kind of an outlook, we remain positive. The only thing is you need to have 1.5 to 2 years time horizon. Stocks that we are recommending, along with Tata Steel, we have Hindalco, Vedanta, JSPL, JSW Steel. These are the names that we are quite positive from a long-term point of view.
Well, thank you very much, Gaurang. Interesting to get, selective counters in the metals pack. It's all about cherry picking, and I think that's what it's going to be for the near to medium term. But great talking to you. Have a good weekend, and we'll hopefully see you soon, Gaurang. On that note, we'll slip into a quick break. We'll come back with a discussion I had with the management of Thermax about their earnings and the outlook for FY25. So stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and
Hello and welcome. We're in a special conversation with Ashish Bhandari, MD and CEO of Thermax. Thermax reported numbers that largely on some parameters beat street expectations, while on some others was in line with what the street was expecting. Ashish, good morning. Thank you very much for joining in. Ashish, walk us through your numbers. Revenues and margins were a tad lower than what the street was expecting, but profits have seen a big jump on back of a lower base. You want to walk us through what went behind those earnings this quarter and what lies ahead for the rest of FY25?
Sure. I would say the numbers have got three sub-themes going on, and I'll cover both the orders and the revenues bit and the profit bit. On the profit side, last year we had one single item which was relating to a lawsuit here where we had taken a 51 crore hit to our numbers, which is why the profits were lower last year. If I correct for that, our profitability margins would show that we were in line, and this year wasn't that much better. If I take a second parsing of the numbers, this year on the operational front, for two parts of our business, both first one being our bio-CNG business, which is where we have set up a new line of business to deliver bio-CNG plants for some customers of ours. We have realized that the engineering that we need to do needs significant changes relative to the commitments and the designs that we had previously worked on. So in that business, we have taken a 45 crore hit for changes that we will have to make over the next couple of quarters on that business. On a separate set of projects where we are executing some really large projects. There also, for completely different set of reasons, we have had engineering issues where again we have taken a hit between 20 to 30 crores. So both of these negative to some extent surprises have affected our profitability numbers for the quarter, which has masked strength in many other parts of our business, including our chemicals and our industrial products business, which continue to go from strength to strength. Even our large boilers business is performing extremely well. That is on the profitability side. Revenues, nothing in particular to note. Our backlog continues to get worked through. I would say there was some slowdown on the revenues because of site-related issues and some customer slowdowns, which are more than what I have seen in the last 1 year. But they are still peripheral. Some of this could have been election-related slowdowns, and that will pick up again kind of as we go through this quarter and the next. On the orders front, we were flat relative to last year. My last comment, and then I'll pass it back. On the orders front, we were flat relative to last year. Again, kind of some amount of slowdown in February and March, but we are seeing good comeback come in now, and we should post some good orders and good growth overall on the orders front as the rest of the year gets delivered.
Ashish, thanks, because you've actually summed up my next couple of questions as well into one answer. But from what I understand, a number of factors that impacted your earnings seems to be a one-off. Do you feel like going into the rest of FY25, earnings will be robust and there should be significant growth both on top and bottom line?
I think what is significant is a relative number, I guess, but I would expect improvement both on bottom line, top line, and on orders. Yeah, and I think some of that will start to show from the next quarter itself. So the one big question on the orders front, which we have been speaking about, we have been talking about how we have been delivering orders growth, but the large orders we haven't seen for some time. In April, which is July, right after the finishing of this quarter, we announced one big 500 crore plus order that we received. We expect to receive more such orders in the rest of the year as well, which would mean that even on the large orders, which are more kind of drive one-offs, but we are in a period of our company where I would expect to see frequent one-offs as well. So at least that gives me confidence that even on the orders side, beyond the steady growth that we are seeing in different parts of the business, we'll have good growth on some of these one-offs as well.
Right. Also, there could be an election impact like you indicated, but does that mean that orders may be lumpy then in nature? So maybe not in this quarter, but Q2 or Q3 could see, front loading of some of these orders. The reason I want to ask you that is because if there are going to be one-offs, have you been bidding significantly for some of those large orders?
So our bidding activity has gone up. Yeah, our overall pipeline of larger orders has gone up. I've always been very clear in sharing that take a look at our Thermax as the 4 parts in which we are now reporting our numbers in. There are 2 big parts of Thermax: the industrial products, which is where we provide product-related solutions around water, clean air, clean energy across multiple sectors. So this is not dependent on the large industries or the large sectors. This sells across the entire breadth of industrial activity in India and outside India as well. Here we have been seeing consistent strength and we continue to do well. The portion that slowed down here was the ethanol market and some portion of the sponge iron market. And like you said, in my view also, that was election-related slowdown. That is now getting released and picking up. I do expect a good pickup out here. Yeah, the bigger projects are more from power, steel, refining, petrochemicals, those sectors, which are more cyclical also in nature. But there also our bidding activity has now picked up. And let's see what our win rates are. Yeah, we will see that in the rest of the year.
Ashish, so for FY25, in your opinion and assessment, and of course the orders that you're bidding for, which segment do you think could drive growth in the financial year and over the next 2 to 3 years as well?
I think the Indian story right now is a multi-engine story, and I think we should look at it like that. There is not one sector which should be looking to drive. We have broad-based demand, which will mean that across sectors we should see investments, and not only that, with the larger demand around how do we get water for industrial solutions, how do we the norms across are getting tougher. And those are happening across sectors. So that is driving one more part of Thermax. The only portion that I think that can be really lumpy, and there is a discussion which is coming very quickly on that, is thermal projects, where the government wants to put in 80 megawatts of thermal power plants again in a very accelerated fashion. Those projects can be very big and can be very lumpy. And if the government does even half of those, I think that is the one sector which I'll call out as particularly lumpy. Nothing beyond that. Everything outside should be good, broad-based growth.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, NEET-UG on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Sun Pharma is in focus today. Company came out with results yesterday wherein they beat estimates when it comes to EBITDA margins and net profit. To speak more about the numbers, I am here joined by Mr. Muralidharan, who is the CFO of the company. Welcome, Mr. Muralidharan.
Good morning.
Good morning. So revenue growth for the company was around 6%, but margins were around 29%, which did beat the estimates. Now, what is the outlook when it comes to, in terms of these numbers that you are seeing for, for FY25 and FY26?
So as far as the top line is concerned, while you're right, for the Q1 we grew about 6.3%, but all our businesses are well positioned for growth and we maintain our top line guidance for FY20 given earlier. However, we are not given any guidance when it comes to EBITDA margins. We will continue to invest in R&D to build a strong portfolio both in specialty and generics, and our SG&A expenses will also increase commensurate with the business.
Okay, so this EBITDA margin uptick was actually on the back of lower R&D expenses versus which was around 6%, which was while you had guided for around 8 to 10% of R&D expenses. Now, will this be step up in the consequent quarters given the timelines haven't really changed for the current pipeline?
See, the R&D expenses definitely will increase in the coming quarters. However, if you look at our EBITDA margins in the past 8 to 10 quarters, we have been able to maintain a particular level based on our focus on to bring in efficiency in the overall business operations, and with the growth in our businesses, which are well positioned for gaining momentum as we move forward.
So, where can we see this EBITDA margin going forward? I mean, will this be sustained at 28-29%?
So I mentioned that we are not giving any guidance on EBITDA margins. What we are saying is that our business where we are focusing like global specialty, India business, emerging markets, and all other business have been positioned well for growth, and it should help us to gain the momentum and the resultant margins.
All right. Also in the US business, sequentially we have seen some kind of a decline. Now, is it fair to believe that entire part of the slippage which we have seen sequentially is led by seasonality?
Yeah, there are two factors. One, there's some element of seasonality in one of the specialty product level on which we mentioned yesterday somewhat in the last 2 quarters. However, our outlook on the specialty business remains very positive, and we expect these specialty products to continue to grow well, and there doesn't seem to be any concern for growth at this point of time. The second factor, of course, we did mention yesterday that the lenalidomide sales in the US for the quarter was not very large, somewhat in line with Q4 of last year. And we have also stated in the past that the generic lenalidomide sales tends to be episodic and fluctuate from quarter to quarter. So this sequential decline, we will not read much into the decline as we look forward in the coming quarters.
Also on the US generic business, now Taro is part of the business. Now, how do you see this business growing?
Now, Sun was already having a stake greater than 70% in Taro, and as we integrate both the organization to create a seamless organization, we do expect that these integration activities will take some time. However, in terms of top line or even overall margins, we do not see any significant impact in the near term.
Also, Mr. Muralidharan, we do have 3 units, which have been affected by regulatory issues. Now, is it possible to tell how much of your pending pipeline for the US is affected because of these issues, and are there any meaningful launches for the US generic market in the coming years?
So as far as critical launches are concerned, the near-term dependency on the sites are very low. However, this will continue to evolve with time. As far as the regulatory status is concerned, we are working on to address the issues at each of the sites. And in due course, after we have completed the remediation in these facilities, will be presented to the FDA for re-inspection.
And on the specialty side, so specialty business for, let's say for next 2 to 3 years, what are you planning over there in terms of volume growth or new product growth and product mix?
So we have shared our product pipeline, which are in different clinical trial stages, along with our PR yesterday. And if you look at our specialty sales in the last 4-5 years, almost more than doubled. And we are continuing to focus on gaining more prescriptions. And as the revenues are concerned, the outcome of the prescription and quality of prescriptions and generations, what we do.
Also, now your product Lexilvi, which is for the hair loss treatment, now this new litigation which has set aside. Now, you mentioned that you intend to oppose the motion file, but your intent to bring this product into market. What are the your growth prospects in that, and any possibility that you are setting to settle this litigation?
So we have mentioned that we will, our intention to rigorously oppose this motion. However, the decision of the elections will launch will be governed by the decision of the court on the motion of the preliminary injunction. Since the matter is under discussion of the court, we would not like to comment any further in terms of any launch timelines.
All right, and my last question to you is on the halol plant with respect to FDA perspective, which we do have import alert since 2022. So what are your plans over there?
So we have been working constructively. We have taken the feedback of the FDA and made commitments to address the concerns in respect of halol. We're working vigorously there to complete the remediation. As and when we're ready, we will inform the regulator for re-inspection.
All right. Well, thank you so much, Mr. Muralidharan, for answering our questions, and all the best.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade,
Welcome back. You're watching Earnings Edge with NDTV Profit. I am Mahima Vachrajani. Well, Exigo is in focus post its Q1 FY24 earnings, and we're now joined by Mr. Alok Bajpai, who's the Group CEO of Exigo. Welcome to the show, Alok. My first question to you is good set of numbers for you this quarter. Revenue is up 16%, EBITDA is up 48%, margins have significantly improved from 9% to that 11% mark, and net profit has significantly jumped by 78%. So give us some color as to how the quarter has gone by you as per your expectation, and what are the demand trends looking like?
Yeah, so it's been a fabulous quarter for us, the June quarter. We've seen GTV expansion of about 27%, which is essentially, the total aggregate value of the tickets that got sold through our platform, which touched 2,988 crores. In fact, in the month of June, we crossed 1,000 crores of worth of tickets sold in a month itself, which is an all-time high. And I think our ability to monetize from our large user base, we have close to 80 million monthly active users. Our ability to monetize from those and improve our conversion rates on those has actually improved a lot. So if you look at our GTV growth on flights, on trains, both was about 28%. And if you look at then our contribution margin, that has also gone up 22%. So I think it's an aggregate of being able to grow at the top of the funnel and also at the bottom of the funnel.
Right. I also want to understand, Alok, that overall, your gross take rate for flights has come down over a period of time. So what is the reason for that, one thing? And what are the kind of trends that you're observing going forward in FY25?
Yeah, so see, the gross take rate on flights is a function of three things. One is the convenience fee that we charge on every flight ticket sold through the platform. The second is the commissions or the incentives that we get from the supply side or the distribution side from our suppliers, and the third is value-added services that we sell. So things like Exigo Assured Flex. These are products that we sell over and above the ticket. So it's a mix of these three. Now, if you look at what's happening out there in the market, right? I think take rates for the whole industry have normalized to where they were pre-COVID, right? I mean, during COVID, obviously, the take rates had gone up for all players. And in the last few quarters, they've normalized. The other thing that's happening is it's a supply-constrained market right now. Remember that the flight market only grew at 4.5% last quarter. And one of the reasons is that we just don't have enough seats to go around at this point. There are lots of grounded planes. The deliveries of the new orders have just started to trickle in. So I think these take rates, you can see them as having reached a point where they could stabilize around this point, right? That's what we expect to happen from here.
Got it. And in terms of the overall gross transaction value, also it is for flights. Flights and train. It's expanded around 28%, and bus it's expanded around 16%. So over there, what are the kinds of trends you're observing? Or do you think that this will continue in the next coming quarters?
See, the primary lever in our business is the fact that Exigo is used by a very large number of people in tier 2, 3, 4 towns. We are the number one app when it comes to trains. We are the number 2 when it comes to buses with our Abhibus brand. And we are the fastest growing on the flight side as well, where our GTV has been expanding way faster than the market. So I think having seen what kind of post-pandemic bounce back has happened. Now we're in an environment where the overall growth of the market will be governed by just the propensity of people to spend more share of wallet on travel, which is happening not just for us but across the industry. But where we have an advantage is that we are sitting at this part of the market where a first-time online booker, whether it is for buses or even for hotels, which is our most recently launched category, first time online booking happening through our platform, we are seeing that we have a significant advantage there because of our deep penetration in tier 2, 3, 4 towns, or the next billion users, as we call them. And that's what will continue to drive our growth being faster than the overall market on the GTV level.
Got it. And can you help me break down, the mix between right now your flights, buses, trains, as well as hotels in terms of revenue, and which one of this is more margin accretive for you?
Yeah, so just at a very high level, right? So trains contributes more than half of our revenue. Like if you look at this quarter, we got about 100 odd crores of revenue coming from that side. If you look at flights, that's our second biggest vertical. About 41.5 crores of revenue came in from there. And bus was very close behind, about close to 40 crores, 39.6 crores to be precise. But if you look at it at the contribution margin level, Again, their train is just 41% of our overall contribution margin, which is at about 36 crores. Flight is 21 crores, and bus has actually grown quite a bit at that side with about 70% plus of revenue flowing into contribution. It's contributing about 29 crores of our contribution margin. So I think it's a fairly diverse business in that sense at the contribution level.
Okay, and in one of your con calls, last time you had mentioned that your focus remains on data science, AI, and value adds when it comes to auguring growth. So I want to understand that what is the progress there? How are you using AI, and how is this benefiting you in terms of cost, or will it be harsh on margins then?
Well, actually, we keep making AI investments, and we've been doing it now for almost a decade, right? So we use AI primarily today in three areas. One is on the customer support side, where we were one of the first OTAs to fully automate our customer support using AI chatbots back in 2017-18. And today, we have a significant percentage. If you look at last fiscal year, close to 90% of our customer support queries were actually handled end-to-end by AI, bringing significant operating leverage to the business. As we speak, we are experimenting with voice AI use cases, and hundreds of hours of conversations every day are happening already using voice AI instead of human agents. And this is something we expect will continue to roll out to a larger percentage of our customer support calls. So at the operating expenses line, we will see some operating leverage starting to flow in because of that. The second is in how we price our value-added services like Exigo Assured Flex. We actually use data science and AI to dynamically price these for in a personalized way, and that's helping us improve our contribution margins. If you see our track record for the last few quarters. Having said that, we would be very happy to let go some of this contribution margin to push the pedal faster on growth, right? Because again, we are sitting at extremely high contribution margins both on flight and bus business, and we are sitting at a point where we can still take share of the market. So we would be very happy to sort of let go some percentage points on contribution margin and chase faster growth there. And the third AI use case for us is how we are helping people plan their trips. So we have a product called Exigo Plan, which is an AI-based trip planner, which is planning hundreds of thousands of itineraries for people already. And I think we are seeing that as a potential top of the funnel growth path for us. And we also use AI to launch new products. Now we also use it for technology development. It cuts down our development cycle dramatically. So most recently, we've gone live with Flight Tracker Pro, which allows flight users to get flight status, gates, boarding gates, baggage belt numbers, and all these information that you need while traveling on the go in real time, and keeps you posted just like we do on the train side already. So these kind of products are helping drive more stickiness and growth.
Got it. Alok, since you mentioned that, to gain market share, you might, cut down on margins a bit. So if you can help me quantify that for FY25, because your margins are at 11% right now, which is a significant growth overall, where do you expect the margins to be overall for FY25? And let's say from a longer term perspective for FY26 as well.
So let me paraphrase what I said. I said that for categories like flights and buses, where we are coming from not a dominant position on buses, we are the second largest player. On flights, we are not in the top 3 players yet. I think we would want to continue chasing market share growth. And therefore, if the percentage contribution margin dips a little bit, we are not concerned as long as we are taking share. At the EBITDA line level, our endeavor will remain to grow absolute EBITDA year on year, right? And I think given the overall scale of the business and the operating leverage coming in, that should be possible to do.
Got it. And in terms of, your guidance because you've done a good 656 crores for FY25 in terms of top line, and bottom line was also around 73. What is the kind of revenue and bottom line number that you're targeting by the end of FY25?
656 crores was actually FY24. And I think this year, we are chasing at the GTV level a velocity of growth which is faster than the market. So the market is likely to grow at around 18% based on various industry reports over the next 3 years. But we expect that we can grow much faster than the market. I mean, the first quarter we grew GTV at about 27%, and we would want to continue to be in the 20s, in terms of GTV growth, right? And I think the rest should flow from there.
One last question in terms of, it's a two-part question. The organized sector versus the unorganized sector is still in this place, when it comes to booking tickets, right? There's still a disparity there. What are the trends that you're observing here? And secondly, there's a huge scope when it comes to corporate travel as well. Is that something that, you're eyeing as well?
Yeah, so I think the B2B or corporate opportunities are something that today we don't play fully in. However, last quarter we've launched Travel Super Mall, which is our B2B agent interface. We have obviously started signing up a few agents who are doing B2B transactions. This might help us reach those areas where people are still booking offline through an agent. We do think that these opportunities are interesting to to bring in further growth to what we do on the B2C side, and we will continue exploring them.
Okay, well, Alok, thank you so much for giving us those insights on Exigo and taking our time and speaking with us at NDTV Profit. But with that, let's focus to literally a stock which is buzzing, which has been buzzing and is buzzing in trade today, and that is Zomato. And Zomato is literally the stock of the day today. Now, the stock is zooming in trade, currently trading at 11.4%. This is because it came out with its Q1 FY25 earnings yesterday, and it is, it has beaten all estimates in terms of numbers. In revenue, it's grown by 18%. EBITDA has significantly improved from that 86 crore mark to 177 crores. EBITDA margins have doubled from that 2.4 mark to 4.2%, and net profit has zoomed 45% QOQ. Now, in terms of key highlights in terms of food delivery business, QOQ we saw a growth of around 12%, whereas year on year it's been 45%. And this growth in terms of quick commerce, which is Blinkit, has been around 45% quarter on quarter, and interestingly it's been 2.5 times in terms of YOY growth. Overall, if you see GOV to contribution, profits rose around 22% and 26% QOQ. In terms of what the management has said, they're coming up with a new one-stop destination app called District. District will basically be an app which will focus on dine-in restaurants as well as events like Zomato Land. And in terms of how other segments have performed, well, Hyperpure supplies have grown around 21% QOQ and has grown 2x YOY. And Dine Out has also swung into profitability this quarter, which is a positive sign. Overall, management has guided that they continue to be positive in terms of food delivery growth, and they're expecting a 20% growth in near term. And overall, they're saying that the dark stores, which are at present 639 in number, will grow to 2,000 by the end of calendar year 2026. Moreover, a lot of brokerages notes have come out with Zomato, and they've raised their target price and have been extremely bullish on Zomato. If you see, Citizen has raised its target price to 280, which poses an upside of 17% from its yesterday's price. And if you just see, Zomato has already zoomed almost 15% in trade today, so it's almost there at that price. What they're saying is that Zomato is their top pick and it's focusing on growth. They've raised their overall food delivery gross order growth at 20% CAGR, and the similarly for quick commerce it's at 50% CAGR growth, and consolidated adjusted EBITDA estimates they've raised by 55% over FY25 to 27 estimates. Nuvama again is bullish on Zomato. They've revised their target price to 285, which is an upside of 20%, and what they're saying is that Zomato continues to deliver a strong growth, and they're now valuing the food delivery business at $140 billion, and For quick commerce, this valuation is around 130 billion US dollars. Now, CLSA has also come out with a note on Zomato, again very bullish, and CLSA is amongst one of the notes which has come out with the highest target price of 350, which is almost a 47% upside. What they're saying is that Blinkit saw profitability improve despite a rapid acceleration in dark stores. Blinkit is pulling away all other competitors so fast is what CLSA believes, and what they're saying is that food delivery is also in the middle game but at a strategic edge, and they're raising their earnings estimates by 6 to 36% over FY25 to FY27. Now this is the overall view of Zomato and why it's buzzing in trade today, but something that should be in focus today is Titan. Titan will come out with its earnings today, and let's look at what the preview on Titan looks like. Well, in terms of numbers, revenue is expected to rise in double digits, around 16% as per Bloomberg estimates. EBITDA is expected to rise around 10% again. However, margins are expected to take a hit there, and net profit is expected to rise roughly around 6%. Now, what you can expect is volumes to be in high single digits in terms of jewelry. There can be impact in the jewelry demand and sales because of the high gold prices in the quarter gone by, and overall demand trends and how inventory is building up is something will be a key monitorable. In terms of the business update, they said that jewelry business grew around 9%, watches and wearable around 15%, eye care around 3%. And emerging business has seen a growth of around 4%. Carrot Lane, however, is something that stands out for Titan overall. For the quarter, it's shown a growth of around 18%. There's also a City on Titan note which says that earnings have been below estimates for 3 out of 4 quarters so far. So this quarter will be definitely something that will be for the watch out for. And what they're saying is that competitive landscape, margin pressures, and demand trends will be the key monitorables. But with that, it's a wrap on the Earnings Edge show. This is NDTV Profit. Stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
All you have to do
is ask Profit.
Bro, what are you doing?
watching Market IQ, and I'm your host Pallavi Nahata. Let's dive straight into how the markets are looking like first. Well, it's not a particularly exciting Friday with the Nifty 50 as well as the Sensex down by almost about 1%. On the Nifty 50, we're actually off the 25,000 mark that we had touched briefly yesterday, and we're actually closer to the 24,800 odd levels in today's day of trade. The Sensex too currently around the 81,100 point mark. Let's also take a quick look at some of the key movers of the Nifty 50 and where those are at. Among the key gainers, HDFC Bank, it's almost 40 points up and contributing heavily to the Nifty 50 gainers. But despite that, we're continuing to see the laggards, outstripping the winners on the street today, and L&T, TCS, RIL and ICICI Bank are among the key drags on the Nifty 50 today. Together, they are contributing almost about 100 points to the decline on the headline today. Let's also take a quick look at the sectoral indices, and we're of course seeing a whole host of red and very little green. It's just Pharma which is currently in the green. It's up by almost about 1/3%. But on the other hand, Realty, Auto, Metal are all down by over 2%, with Realty down almost by about 3% actually. IT, PSU Bank, PSC, Commodities, MNC are also all in the red by anywhere between over 1% to about 2%. Let's also take a look at the broader markets. The breadth of the market continues to look weak, and the Nifty Mid-Cap 150 is down by about 3/4%, while the Nifty Small Cap 250 is down by over 0.5%. But let's shift focus to one of the stocks that's buzzing in trade today. Zomato is the stock of the day without doubt. It's up over 10% right now, and that's after coming off the day's high. Brokerages as well seem upbeat about the food delivery giant. Let's call in Mahima to understand what is the street expecting of Zomato. Hi Mahima, it's been a stellar result for Zomato. What's the expectation going forward? Tell us.
So brokerages are pretty bullish on Zomato. The price range is between 270 to almost 350. So that's, the upside is ranging from that 17% mark to almost a 47% mark. To start with, City on Zomato, it's given a target price of 280 and it remains their top pick. What they're saying is that they've raised their gross order value estimates for food delivery between 1 to 2%, and same for quick commerce between 16 to 18%. They have also raised the CAGR growth for food delivery in gross order value by 20% and 50% plus for quick commerce. And overall EBITDA CAGR growth, they are estimating at 55% over FY 25 to 27 estimates. Nuvama is also bullish on Zomato with a target price of 285. What they're saying is that they're now valuing the food delivery business at $14 billion and quick commerce at $13 billion. Access Capital again is bullish on Zomato with a target price of 287. What they're saying is that they're confident in quick commerce, and they raised the top line estimates by 7 to 12% over FY 25 to 27 estimates. And lastly, CLSA has maintained outperform with the highest target price so far amongst all the brokerages, which is 350. They're saying that Blinkit saw profitability improve despite a rapid acceleration in the dark stores. And what they're saying is that food delivery also in the middle game, but at a strategic edge. And they're raising their earnings estimates by 6 to 36% over FY 25 to 27 estimates, and target price is equal weighted blend of DC of FY 26 PE, and higher multiple for Blinkit and food delivery and higher earnings for both is what the brokerage is estimating. So this is the overall view of what brokerages are making on Zomato.
Right. In fact, we spoke to Gautam Duggar from Motilal Oswal about Zomato, and he highlighted the role of Blinkit in Zomato's rally. Listen into what he had to say about the road ahead.
Zomato, when we initiated last year in April at a price of 55, and then we added it in the model portfolio at 75 rupees, and we are still holding it as one of our top ideas in the model portfolio. We also raised the target price yesterday after these results to 300 rupees now. and I thought that's a decent upside. But looking at the way stock is behaving today, pretty soon that upside will be less than 10%. Now, issue is predicting Blinkit is becoming a bit difficult because they are defying all expectations. If I look at my numbers, our DCF based target price is 300, and we are assuming a 75% CAGR for Blinkit. And now Blinkit contributes 171 rupees out of that 300 rupees of target price that we have put out. If that 75% number drops to, let's say, 50% CAGR, which you would reckon is still a very decent number, in that case, the target price drops to just 180 rupees. And value of Blinkit comes off from 170 rupees to 100 rupees per share. So essentially, the upside that we have seen in the last 3-4 quarters is being led by Blinkit, whereas the food delivery business has stabilized now. It's in a steady momentum. The real upside that you have seen over the last 1 year or so has come on the back of phenomenal GOV growth that you have seen in Blinkit. And our expectation is that it's going to be very difficult to predict some of these numbers for a stock like Zomato on a quarter-to-quarter basis. So if you're holding it, I would suggest that you keep holding it because it's in uncharted territory right now, both the business as well as the stock valuation. Now, Zomato, basically today, if you look at after today's rise of whatever 17-18%, the market cap is now almost touching 2.5 lakh crore.
Right, Tata Motors is under pressure today after reporting its Q1 numbers. In fact, it's among the top losers on the Nifty 50 along with other auto stocks, Eicher and Maruti Suzuki. The auto major has seen a 72% jump in profit while margins have expanded. Varsha joins us with the key details and conference call highlights. Varsha?
Well, thanks Pallavi for that. So if you see, profit did surge more than 70% for the company on JLR sales boost, which did beat estimates. Revenue, the numbers, if you see, if I just see the segmental revenue for the company, for JLR revenue rose almost 5% year on year. So optical beat on EBIT on lower depreciation and EBITDA is in line. They company anticipates near-term production issues at JLR in Q2 and Q3. If you see, they have retained guidance on EBIT margin of more than 8.5% and net cash balance sheet. Order book reduced to almost 104,000 units from 133,000 units in March 24. If you see that PV business, that is passenger vehicle business, revenue decline led by decline in its EV volume and overall volume. Electric vehicle volume decreased sharply by almost 14% due to sharp decline in fleet segment. If you see the EBITDA margin expansion was driven by cost reduction efforts, and weak top line led to its EBIT margin to decline. If you see their commercial vehicle business, revenue growth was driven by robust volume growth and expansion in margin was led by better mix and realization. While good numbers, but stock is down as July auto sales were disappointing, and in the domestic PV business, if you see, bookings remain strong and high inventory is a concern for company and industry as a whole. Just a few of the con call highlights. India EV business is on track irrespective of local and global slowdown. They aim to increase contribution of EVs of overall volume to 20% from 12%.
Varsha, while you are with us, also talk about metals which are in focus today and not for the right reasons. Again, among the key drags, among the sectoral indices, down by over 2% along with auto. And predominantly that's because the Supreme Court has reclassified mining royalty as contractual payment and not as a tax. So what can you tell us about that?
Well, yes, Pallavi. So if you see, Supreme Court of India's latest ruling is negative for mining companies. Court has reclassified royalties as contractual payment and not tax. If this new rule is applied retrospectively, meaning it is applicable to previous periods, it exposes mining companies to crores of potential taxes. PSUs alone could face almost 70,000 to 80,000 crores in demands, impacting companies like Coal India, NMDC, Hindustan Copper, Hindustan Zinc, Oil India. On the private sector side, side companies, if you see, they could see bills exceeding 1 lakh crore as per councillors, and this includes companies like Vedanta, Hindalco, JSW Steel, Tata Steel, Adani Enterprises, as well as cement counters who have their own limestone mining operations. Now, who benefits from this is the state government, where companies do have mining operations in the states, like the state includes Orissa, Jharkhand, Chhattisgarh, Maharashtra, Assam and West Bengal.
Right, and moving on to one of the most anticipated IPOs, Ola Electric has opened for subscription from August 2nd to the 6th and has been subscribed 23% as per exchanges. The anchor book, however, saw a big hit. Tushar, who tracks this closely, joins us with more details on that. Tushar?
Yeah, thank you, Pallavi. So, like you mentioned, 23% subscription as of 1 p.m. The retail portion is now fully subscribed at 1.06 times. The employee portion is subscribed at about 3.55 times. The NII and the QIB portions are yet to see some meaningful uptake as of 1 p.m. But yes, the anchor book was in news, especially since last night, because about 40% of the anchor book has been picked up by mutual funds. So, about 2,763 crore rupees were raised from anchor investors by allotting them about 36.35 crore shares at 76 rupees a piece. That's the upper end of the price band, which gives the company a valuation of about $4 billion. The company is looking to raise a total of about 6,150 crore rupees. 2,763 has already been raised by anchor investors. The IPO is from the 2nd of August to the 6th of August, accounting for the weekend in between. So the majority of the interest may just come in on Monday, where the NIIs and the QIBs may step in. Pallavi.
Right, and we'll continue to bring more on that, but sticking with primary markets, Meesho announced on Friday the appointment of 4 independent directors, shoring up its board ahead of its imminent initial public offering. My colleague Rishabh joins us with more details on that one. Rishabh.
That's right, Pallavi. Meesho, which is India's homegrown e-commerce marketplace, has announced the appointment of 4 independent directors. Now, typically when a startup appoints independent directors, it is a sign of them preparing for an IPO. It is a sign of shoring up corporate governance. So a bit on the independent directors, the first one is Hari Bhartia, who is the founder of the Jubilant Bhartia Group, and he's also the co-chairman of Jubilant Pharmova, Jubilant Ingrevia, and Jubilant Foodworks. The second one is Kalpana Morparia, a veteran banker, was with ICICI Bank for a very long time, and in her last role was the chairperson of JP Morgan for South and Southeast Asia. Apart from that, there's Rohit Bhagat, who is the non-executive chairman of PhonePe, and also Surojit Chatterjee, who was the former Chief Product Officer of Coinbase. He led them to an IPO, and also a former Vice President at Google. So now this board has sort of expanded to bringing independent directors. Earlier, it was purely the founders and the investors that had invested in Meesho. This comes when Meesho's founder, Vidit Atre, has already clarified that an IPO could be possible in 2025. And Meesho is also moving its domicile from the US to back to India. So an interesting time for Meesho, Pallavi.
Absolutely. Indeed, interesting times. But moving on, speaking at the FICCI Capital Markets Conference, SEBI Chairperson Madhavi Puri-Buch revealed that the regulator is working on several initiatives to streamline the IPO process. Listen in.
One of the innovations that you are going to see very soon, we've already taken it to our advisory committee, and I'm told that it got a very, very positive response, is a new innovation brought forward by the SEBI team, which is a combo product of a rights issue and a preferential allotment. Now, what this is going to achieve is something quite transformational, as I say, get the best of both worlds. So you get the best of a rights issue, you get the best of a preferential allotment. What does this mean? It means that, first of all, the entire end-to-end process can be completed in 23 days, as compared to even a preferential allotment, which the industry loves because of the speed, takes 42 days. So this innovation is actually going to almost halve the time that you need even as compared to the fastest route available today. So this is really an expressway which we are facilitating.
With that, it's time to slip into a short break, but do stay tuned. On the other side, we bring to you what the SC had to say about the NEET fiasco.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial...
Welcome back. You're watching Market IQ and NDTV Profit. 3 vehicles came crashing down after a hoarding collapsed in Maharashtra's Thane district. Rescue operations are underway to ascertain any further damage to the spot. NDTV's Radhika Ramaswamy joins us from the location. Radhika?
That's right, a very unfortunate incident that took place in Kalyan in Thane early this morning. This hoarding collapse happened at about 10 a.m. This has injured 2 people and several vehicles were crushed under the hoarding. In fact, at least about 2 auto rickshaws, a couple of motorbikes and a couple of cars were injured in this collapse. Thankfully, though, no casualties reported as of now. Nobody is buried under the debris is what the information we're getting by way of authorities in Thane. But very, very unfortunate incident, a very stark and tragic reminder of Ghatkopar hoarding collapse, which killed 17 people and led to at least about 70 people being injured. So at this point, of course, the investigations are underway to understand whether this hoarding was in fact authorized, whether there were permissions being granted or whether some sort of norms and rules were flouted in order to erect this particular hoarding. Of course, in a Ghatkopar hoarding collapse charge sheet had been filed, multiple people were arrested and departmental inquiry also going on as far as GRP Commissionerate is concerned. Several administrative lapses and negligence have been found in Ghatkopar hoarding collapse, where the hoarding was in fact authorized without following all the rules and norms, as far as civic authorities and railways are concerned. Whether rules were followed as far as Thane collapse goes, that is a matter of investigation, and FIR could be registered and the contractor and owner of that advertising agency likely to be booked in this case. But at this point, the details we're getting is that 2 people were injured, multiple vehicles were damaged as a result of the collapse that happened in Thane at about 10 a.m. today.
Radhika, the Supreme Court today also pronounced its judgment on reasons for not cancelling the 2024 NEET-UG medical entrance exams. That's despite a raging controversy over paper leak allegations and other irregularities surrounding it. My colleague Varun joins us with more details. Varun?
Yeah, hi, thanks. So while delivering its detailed verdict in the NEET-UG 2024 fiasco, the Supreme Court rapped the National Testing Agency for the flip-flops committed by it in this year's fiasco. The court criticized the NTA's lax policy on paper leak, distribution of wrong question papers, and awarding marks for a wrong answer, and it said that such mistakes should not be repeated in the future. In addition, the court has expanded the remit of the expert committee that was formulated by the centre to look into this year's paper leak. The court said that the committee must come up with a mechanism to ensure rigorous checks and balances in the exam, coupled with a standard operating procedure as to how the exam should be conducted. Once formulated, this SOP should be adopted by the NTA, the court had said. Now, it added that stricter procedures must be recommended by the committee to verify the credentials of candidates. Further, the court remarked that viability of real-time CCTV cameras in centres must be considered, along with the development of a robust grievance redressal mechanism for students. Lastly, the court said that the committee should recommend data security protocols so all sensitive information is protected and leaks are avoided, and cybersecurity and vulnerability audits should be conducted regularly.
Right, thanks a lot for that, Varun. And moving on to the FMCG space. FMCG players are facing a double whammy of slower than expected recovery in rural markets and intensified competition from emerging brands. To provide further insights into this pressing issue, my colleague Sesha spoke to K. Ramakrishnan, Managing Director at Kantar World Panel. Listen into a slice of that conversation.
I think we have to look at rural markets slightly differently in the sense that any phenomenon affects the rural market with a little bit of a lag. If you take demonetization, the time it reaches, the impact reaches rural is a little later. If you take GST, so was it. Then COVID came, COVID hit urban India in 2020, but by the time it reached rural India and had a severe impact, it was 2021. Similarly, inflation as well. For it to impact purchases and then for the impact to go away when the inflation eases off, that has taken a little bit of time. And so therefore, that is why the reason for the lag in terms of rural responding in spite of the fact that inflation was easing off. But that said, at the current scenario, in the last 2 months, if you see the worms, the lines of urban and rural growth have intersected each other and rural has actually gone a little ahead of urban. That is from a trend perspective. But secondly, what affects rural demand or consumption? There are 3 or 4 big factors which influence it. One is monsoons, which expected to be very good this year. In fact, it's set in quite well. Second, harvest, which is actually sometimes a function of monsoon also, but even otherwise, it is expected that the harvest this year will be pretty good. Third is minimum support price, and definitely the government has supported that. Fourth is the government push or policy initiatives which support rural development, which we have seen in yesterday's budget. There have been quite a few announcements of agricultural development or rural prosperity growth. The fifth is non-farm employment, which is things like the Rozgar Yojana, etc., which also have been good. So if you see, all fundamentals are pointing towards a robust consumption growth in rural. However, there is a trend line which has to catch up. So therefore, from that point of view, we believe that it will take a little while for it to catch up and grow. So it is likely to be at the current levels, which means a little muted for another couple of quarters or so. And maybe towards the end of this calendar year and the last quarter of the financial year, we might see a strong resurgence in rural.
In terms of the new launches, could you tell us which categories have actually seen most of the launches in 2023? And also, how sustainable has it been? If you could help me understand category-wise.
So launches are becoming difficult going from time to time. I mean, if you go back, let's say 2019, in 2019, we noticed that about only 4% of the brands launched reached a penetration of 1% or above in 2020, which means at the end of 1 year, what is the penetration that they reach? And 1%, only 4% of the brands reached. And that number is getting even more difficult right now. So if you look at the average trials or average penetration that brands are able to sustain at the end of 1 year, it is getting lesser and lesser. Why is that so? One reason is the intense competition and the increasing number of new launches that are happening. Second is the multiplicity of offerings that are, that are facing the consumer, both from a medium and communication perspective and from an offerings perspective. So to that extent, there's a limit to which the basket of the consumer, the consumption basket of the consumer can go up. So therefore, there is always a compromise of one over the other. And that's causing a little bit of a difficulty in terms of new launches, and it's becoming more and more difficult. On your question of where the launches are more in the recent year, I think as always, foods see a whole lot of new launches at any given point of time. Merely from the point of view that most foods consumers have a variety-seeking behavior, particularly if you look at snacking, which is a very large component in India. There's a very clear variety-seeking behavior. So therefore, there is a continuous need for launches there, new variants, new flavors, and so on and so forth. So foods always continues to be one. And the other end is in personal care, where again, both from a format perspective, there are new offerings. Second is from a packaging perspective, there are new offerings. And third is from a completely new solution perspective, also there are offerings. So in these two segments, we are seeing a fair amount of new launches being seen.
Right, and speaking of the FMCG space, Dabur posted its Q1 results yesterday, and during the Q1 result con call of the CEO, Mohit Malhotra addressed the supply chain issue in Badshah Masala, attributing it to the high scrutiny over spices controversy. Listen in.
Overall, I think the business is doing reasonably well, and we are very confident doing well. As far as the international bit of Badshah is concerned, we also faced a pushback from international regulators, especially in the UK, and there's been very tight screening and scrutiny of all the dispatches which are happening from India to international, driven by the controversy which has happened. So while our products have not got picked up, but because of a very high scrutiny, there's a long queue and backup of the supplies which is lining up and leading to delays in the supply chain. Actually, our international business declined in Badshah on account of supply chain constraints in the international business, which I think we will correct going forward in the next quarter, and growth should pick up.
And that's all we have on the show for now, but do stay tuned to NDTV Profit for more news and insights.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving,
What does it take to start up? Obviously, you need an idea and money, but it's been said that you also need courage. You need instinct and conviction, and most importantly, the ability to bounce back from setbacks. I'm sure you need a lot of other qualities that I have no idea about. So that's why, on this episode of Big Decisions, I've invited a first-time entrepreneur, one who has become a household name, not just because of the success of her business and the products that it sells, but also because she helps people who are following in her footsteps. She's a shark and the co-founder and chief executive officer of Sugar Cosmetics. Vineeta Singh, thanks so much for taking the time.
Thanks, Alex. Very happy to be here. And I think the quality you did not mention is a bit of madness, I think, which you also need to start off.
Okay, so I thought more than just about the advice, and I'm sure that a lot of people will benefit from the advice that you do give, but I thought talking about certain aspects of your journey would benefit people because you are a first-time entrepreneur. Your parents are doctors. Where did the idea to start up come about?
Yeah. So my parents they're the doctors who don't save your life on a plane because they're both PhDs, so they were into medical research. And I grew up in the Ames campus, seeing doctors everywhere. And I wanted to do exact opposite of what saw my dad do, which is work really hard and make very little money. So I wanted to work less and make more money. And I thought entrepreneurship is actually the shortest way to get there. I decided probably at the age of 17 or 18, when I was just going into my engineering college, I was sitting next to a professor and we started talking and he started asking me about what I want to do with my life. And I started talking about that whole thing around wanting to be rich. And one of the ideas that came up in that conversation was entrepreneurship. So I spent my entire college journey reading up about entrepreneurs, and I thought this sounds really exciting. You get an opportunity to build a legacy, change the world, and in the process also get rich, because all of the people I read about in books were pretty rich. And so that's when I decided very early that I'm going to be an entrepreneur. Of course, I would learn it the hard way, probably 15 years into my entrepreneurial journey. It is not the fastest way to get rich.
It's not?
By far.
Do you know what is?
I think, probably every job in terms of that you can get for the qualification that you have will probably get you to a certain net worth faster. So this is a high risk, high reward kind of game, which requires a lot of patience. And I feel that the journey has been absolutely worthwhile. But when you're in those first 10, 12, 15 years, when you don't know where it's going, and you don't even know if there's light at the end of the tunnel, then you wonder if it was the right decision.
Which is why I wanted to talk to you today. How many of the things that you read in those books as a 17, 18-year-old do you think now are total rubbish?
So I think one of the things that I remember as a pattern was that entrepreneurs are a certain way, because all the books were written by these alpha men geniuses who were really had a very strong instinct and somehow managed to get it right in the first or second attempt. And it just, when I was failing in my first few businesses, I thought that the fact that I wasn't alpha or male or genius, or I didn't get it right in my first business, second business, probably meant I did not have the right to be an entrepreneur. But now, having seen my own journey, and the fact that in spite of being somebody who wasn't really cut out in the traditional sense to be an entrepreneur, wasn't from an entrepreneurial background, but still somehow managed to make it. And all of the other entrepreneurs that I meet, thanks to Shark Tank and thanks to the friends that I have, I've realized that they do come in all shapes and sizes, and there is just one thing that's common in all of them, that somehow, in the face of all the failure, rejection, somehow they manage to figure out how to put, show up the next day for their consumers, and then the next, and then the next. And 15, 20 years down the line, they figured out that just by showing up every day, they managed to build something world-class when everybody had sort of written them off.
That's a very interesting insight. And it is something that you can draw parallels to various other things in life, I think. But having said that, what I want to understand is, are the barriers very high when you're starting up, particularly if you don't have the support, I would say, and I'm not talking about emotional support, I'm talking about capital.
Yeah, I think emotional support is a big topic as well, and so is capital. And when I look back at my journey, I think it's easy to say, and I always, tell founders that if you want to start up, if that's something that you want to do, don't go and get yourself those golden handcuffs, which is like a high-paying job, because it'll be that much harder. Your lifestyle adapts, right? So I remember in my own journey, I was 23 when I decided to give up an investment banking job offer to start up. Now, in that time, the decision was even an option for me because of a few things that were privileges that I had. Firstly, my parents had managed to pay for my education.
Right.
So I didn't have a gigantic education loan on my head. Secondly, I did not have the responsibility of taking care of my parents because they had planned their retirement, everything super well, and they were very well off. On the contrary, there were days in my first 4 or 5 years of my startup journey where it was such a struggle for me to get by in Bombay because of the cost of living, and in spite of having like a very, very small, I was paying like 5,000 rupees rent for the place that I was living in Powai, and in spite of all of that, I didn't even have money to afford like an water purifier. And
so you needed help.
My mom would come in and just sometimes buy these things for me, and at the age of 27, getting your parents to sponsor such basic necessities is very humiliating, but it was something that I had the option of, and there are many people who don't have that kind of support. So I think all of those factors, and the fact that I had never been used to, I had a modest upbringing. I didn't have in terms of a middle class, regular upbringing where things like air conditioning and is not taken for granted, and you know how to manage by public transport, you can go intercity by a bus without feeling like really where have I come and what has happened to my life. So I think all of that really helped, and that's why when I speak to founders, I tell them that and my batchmates, by the way, on the contrary, I am batchmates, they were looking at which house to buy. They were probably, in their, them and their spouse had a couple of cars, and for them, partying every weekend and planning a Europe vacation every third month wasn't such a big deal. And the contrast was so much that I just thought that if I had gotten used to that paycheck from an investment banking firm, and then I had to give that all up to come to a place where buying a coffee from a coffee shop would be the month's biggest treat for myself, it would have been impossible. I mean, for me, it would have been very hard. So I think I was pretty lucky that A, I didn't have a lot of financial liability starting up. B, I did not, I had never experienced what having a lifestyle which involves a certain spend is. And when you go in one direction, it's fine. As an entrepreneur, you go up, down, right? So if you're used to a certain lifestyle and it's all taken away, then you have to come back and then you have to go back up. That is so much harder. I did not at that time have children, which I now have. And, for me right now, thinking about such decisions would have been much harder because you're talking about their education, their health insurance and things. So I think when you start young and you have nothing to lose, which I had. Like at 23, I had nothing to lose. I did not have anybody in the world who was dependent on me. I had no liabilities. That was a big advantage, and at that time I used to not value that so much because I took it for granted. But now looking back at the circumstances a lot of others go through in their journey, I think that was probably the greatest funding or big boost that I had in my starting journey, which I never acknowledged. And then I think the other big thing is it does help in a lot of types of businesses to have access to some capital.
Yes, I was going to come to that. Is that so? I understand that you bootstrapped.
Yes, so my first business and my second business we had bootstrapped. In this company, Sugar, we raised very early on, and I've seen the difference. When you bootstrap, there are many years where everything is hand to mouth, and you end up doing whatever is going to bring cash into the business. And cash flow, that first day of the month where salaries have to be paid.
Oh man.
It is like, like it gives palpitations, like the whole world celebrates their month.
Did you pay yourself a salary?
So yes, from day one, but like in the first couple of years, it was 10,000 rupees.
Okay.
Now what do you do with 10,000 rupees?
You can't do anything.
Then it went to 25,000, 50,000. But yeah, I have always paid myself because it is, even if it's notional, it's important. And
Why do you think that it's important?
Because you sometimes assume that your company is super successful, profitable because you've not factored your own opportunity cost. And that's a misnomer because at the end of the day, if you were to take a real salary, it would be a big hit. Second, I think it is, at the end of the day, a liquidity event for a founder happens like once in like a few years. Maybe it could be decades if you eventually just take a company public, or when you get a secondary transaction that happens. So there is no liquidity. So you can, if you look at most founders, you can say, oh, he's a billionaire, she's a billionaire. If she's going to need like $1 billion or even $100 million to pay for, their something that their family needs,
an emergency.
It's not going to be possible. It's not going to be possible because it's all paper wealth, right? So I feel that because all of the wealth that we have is paper wealth and liquidity events happen rarely, just having a basic salary that can take care of your monthly expenses, even if you don't end up with the 30% savings or whatever, I think that's important. And I did not have it in my first few years. Like I told you, when I was on 10,000, it was basically just hand to mouth. Luckily, I had won some prize while graduating from IIM Ahmedabad, Best Woman All-Rounder, which was $5,000. And though that helped me last those 2 years. But if it weren't for that, it is the salary that makes an entrepreneur's household run. And which is why the salary is important. And I would say that the faster you can get in your journey to taking market salaries, the better it is, because then you're not trying to get out of your business very quickly. And then you can stay invested in the long run. That's when the compounding plays out. Because, in a business, the compounding takes like 15, 20 years to play out. And I've seen that. Like nobody believes that thing, but it's like 10 years, it's not even, you're struggling to even do like 2-3 crores of revenue, right? And then it's suddenly you start hitting 10, and then the 10 to 100 journey is probably 4-5 years. But then the 100 to 500 sometimes happens 2-3 years. And then for, I haven't seen that journey, but the 500 to 5,000 crore journey also hopefully shouldn't be more than a few years. So that's where the compounding is kicking in. But how do you sustain that period?
I want to talk about managing a team and building the business. We've already covered quite a bit of things that I think people thinking of starting up will benefit from, but we have to slip into a very quick break. On the other side, we'll talk about what Vinita learned from her early failures. She's spoken about some of those, and she's already given you a few insights. There's more on the other side, so do stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target?
Welcome back. This is Big Decisions, and we're speaking to Vinita Singh, the co-founder and chief executive officer of Sugar Cosmetics. We're speaking about your life, Vinita, and I think a lot of people have already benefited. But let's talk about the early failures, because I think based on what you've told me so far, that has been your biggest learning experience. You spoke about funding as well. You learned from your first two experiences that you needed to get that funding early. For people starting out right now, is it difficult to get capital?
So I think it's become a lot better than when I started up, which was about 17, 18 years ago. And I'll tell you why it helps, right? So when I was running my first two businesses, it was bootstrapped. When you need cash so desperately, what you do is that on weekends, I was teaching at some institute where there was, people were learning to study for the entrance for IIMs called CAT. So there was a CAT coaching institute. I used to go teach there to make some money on the side.
You need to write a book, Vinita.
And then you're focused on building. We were focused on building a background verification tool. But then sometimes you'd get like the side gig, a consulting assignment, and you'd be like, oh God, that's good cash. And I could like really pay like 2 more people salaries with that, so let me just take that on. And then suddenly you're not focused, and compounding comes from focus. But what you are doing is what gets you quickest money fast. So I realized for those 4-5 years, I tried everything, right? I was scrambling, I was cold calling, I was really, to make ends meet, I was taking on these odd jobs.
And there's no delineation between your own finances and your business's finances. Is that important?
I think it's super important. And, when you raise capital, you're able to do that because you've raised capital in the name of the company. But till that point happens, and I think sometimes even after that, like there is this free flow where every time the company is short of money, you're transferring whatever you have back in. And then, you're like, okay, like some revenue came in and then you pull that back. I think that's terrible. And luckily now the company is at a scale that I can't even afford to do that. But that's called good fiscal discipline, where you're running the business from its own cash and it's not dependent on the shareholders every now and then for just being cash strapped. And it teaches you a bit of discipline. And that I didn't have.
Obviously there's a community that's looking to invest, but how do you make the two meet?
So there are a lot of platforms that do a beautiful job. And in fact, one of our rounds in Sugar was actually through one such platform. It's called Let's Venture, where you get one high net worth individual to say, okay, I'm writing a check of say 10 lakhs in this company because I believe in it. And then just seeing that there are others who will come in and there's a joint call, so you don't have to pitch to everybody individually. And then they'll start pooling in money.
Right.
And to raise up to 5 crores, actually a lot of these platforms are a great opportunity, because when you have angel investors, you're not accountable to a single large investor, and it makes it easier because...
I was going to ask that, dealing with... So obviously you have a certain ideology, you have a certain idea about where you want to take your business. Is it challenging to deal with other people that come from the outside? You made your pitch, sure, but then it's the pitch and you have a certain direction in mind for your business that may not necessarily gel with the people who are footing the bill as well. So how do you deal with that?
So no, it is hard. And as an investor, I will tell you that, like, for a lot of businesses and for a lot of founders, fundraising through equity does not make sense. Because the moment, it's like you're on a treadmill. The moment you take your first capital, the time starts.
Right.
And then you have a time frame.
Because they've got to exit.
They have to exit, right? So you have a time frame. If it's a typical VC fund, you have a 7 years. And the clock is ticking. So all your decision making has to be for that 7-year optimization for that investor.
Right.
And a lot of times they're patient, supportive, they might give you an extension, but it's really not, their life. It is your life, right? So there are these clashes between shorter term, like the 5-year decision, optimization decision, versus a lifetime decision, which you as a founder want to make. So for a lot of businesses, which I think are probably gonna do good business, like they can become 50 crore, 100 crore, but maybe not 5,000 crore, it does not make sense, because you can only get those exits for investors if you're building something which has a potential to be very large. But is a 50 crore business with 10 crore PAT not a good business? It's a great business, right? It's a fantastic business, but an investor will not find that palatable.
And you need to be profitable, ultimately.
At some point, you need to be profitable as well. So I feel that that's why equity is not for everybody. It sounds cool because of the valuations being spoken about so much. But I think, one should be really careful before taking that. Debt, on the other hand, I think would have been a great option for a lot of companies. But unfortunately, still debt through traditional banks is only available after you're profitable, you have enough cash flow. By the time you get there, you're okay, right? You don't need it as much. So you need it in the first couple of years where it's not available to you. But I think the government's also putting in some effort for women. There are these CGTSME schemes which make this debt easier. Now there are certain NBFCs that do revenue-based financing for a certain amount, but that's a very high interest cost. But yeah, so I think in India still debt hasn't evolved so much for startups as equity have. But I think entrepreneurs should make the best of it, raise capital wherever they think that there's an opportunity to scale. But my only advice is raise it as late as you can. Because the moment you're raising, you can't then figure out, you can't be honest with yourself, right? Because if I raise money and I figure out, actually, I don't have product market fit. I might need to change everything, my pricing, my product to appeal to this consumer. But you already have these investors, right? So we actually pivoted. We had started as a subscription-based e-commerce company called FabBag. We raised capital. We got to like a 7 crore revenue, right? Now we realize that the aspiration of getting this to 100 crore, 1,000 crore is not going to happen because subscription is not going to scale. But there are investors. We had to convince them that now we're going to launch a brand, right? So a lot of investors were like, what? I didn't sign up for this. I signed up for an e-commerce company, tech, explosion. You are saying you're starting a brand? That's a very different business.
You are, and I don't know how many people know this, you are a runner, ultra marathoner, also the completion, so you've completed an Ironman challenge, which I cannot wrap my head around it. First of all, let me say on record. You've said that there are parallels to draw between running and running a business. What are they?
I think for me, the learning was that there are lots of parallels. I think the first one is that, when you're running and it gets very hard, right? I did this ultra marathon, which was like 89 kilometers, right? the idea of running 89 kilometers, even when you're at the 20 kilometer mark, 30 kilometer mark, 60 kilometer mark, is very overwhelming. Just like when you say that I'm going to build a 5,000 crore company, it is very overwhelming because you're like, what am I going to do? How am I going to do it, right? I can't do this. I want to give up. And at that point of time during the race, you know, there have been so many times where I tell myself that I just need to get to the next light pole. Right? And I can see, I've crossed one light pole there. I can see the next light pole, which is right there. If I think about the fact that I still have 70 kilometers, I will give up.
It's impossible.
And I will quit.
Yeah.
But if I think that I just have to somehow find the courage to get to the next light pole, it seems easier, right? And then I get there. And then at that next light pole, I'm only making a decision, get there. And there have been so many times in my entrepreneurial journey where, you know, I've had like more than 100 venture capital rejections. And sometimes it's like you feel like you're going to get the check the next day and then you get rejected on something as basic as market size is too small. When that happens, you feel like you want to give up, right? And at that time, you can't really think, oh, but I wanted to create the 5,000 crore company. I'm getting nowhere. I'm still stuck. At that time, you just tell yourself, can I show up tomorrow for my customers? I just have to show up tomorrow. And then the next day. And then the next. I have to get through this quarter. It's a very tough quarter, but let me get through this quarter. So I think the idea that you can have a big dream, that you want to build something big or you want to finish an 89-kilometer race. But like every day, just get yourself to the next milestone, the small stuff, which is the next customer or the next quarter, the next product. I think that's really similar. And I think the other part of it, which also mattered in my entrepreneurial journey, is that all said and done, the most important step was always showing up at the start line. Because that's the part which, like, you know, differentiates the most number of people. Because a lot of people think about running, a lot of people are talking about marathons. I also signed up once for an ultra marathon and I didn't get on the plane to South Africa where the race was because I was just scared that I'll fail. And I'll get a medal, you know, I'll get that did not finish tag, which I did not want to associate with myself. And when I looked back at, you know, all the people who did not finish versus those who didn't show up at the start line, I realized majority of people don't show up at the start line. So I think the other thing about business is, if this is, you have that instinct that this is what you're meant to do and you have that desire to create something, to build something, just do it. As simple,
Stop talking about it.
Show up.
Stop talking about it.
Show up at the start line and everything else, like, you'll figure out on the journey. You can't figure out how to do a race when you're not on the track. The only way is by getting there to the start line and then going one step after the other.
On that note, Vinita, thanks so much for taking the time. Pleasure speaking with you on Big Decisions.
Thank you. Thank you so much, Alex.
Hopefully, this conversation has helped you with your big decision. Let us know in the comments and do stay tuned. Lots more coming up on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome to Earnings Edge. I am Mahima Vachrajani. One stock that is in focus today is Imami. It came out with its Q1 FY25 earnings yesterday. Revenue was up 10%, EBITDA was up around 14%. EBITDA margins have slightly improved from the 23% mark to the 23.9% mark, and net profit is up around 10%. However, the stock is seeing some pressure today. It's down around 4.8%. But to discuss more about how the quarter has gone by and to break those numbers for us, we're joined by Mr. H. Bansali, CEO of Finance and Strategy and Business Development at Imami. Welcome to the show, Mr. Bansali. My first question to you is that, give us some color as to how the quarter has gone by as per your expectations. What are the kind of trends that you're observing, overall in the FMCG space?
Yeah, the performance is in line with our expectation. As you know, we have been able to deliver a double-digit growth in such a challenging environment across the globe, domestic market and also the international markets, and both have performed very well. Domestic business, the growth is led by a volume growth of 8.7%, and the international business also the constant growth is at 11%. So all-round growth, and within this also, if you look at, the growth has come from all the channels. It's not that few of the channels and all. So we are highly satisfied. The growth has been very good, and we feel that the same kind of a growth would continue going forward.
Right. Mr. Bansali, for a lot of FMCG companies, the rural growth has been picking up. In fact, there are companies that have said that the rural growth has been more than the urban growth. It overall outpaced the urban growth. So I want to understand is how is Imami seeing the rural recovery in terms of demand?
Yes, this is the second consecutive quarter where trade has also shown a good growth, which was earlier was GT channel was rather flat or declining. And within this, the rural also has grown by almost, the rural channel has grown 5% and GT growth has also been 5%. And on the other side, the new age channels kind of modern trade, e-commerce and institutional sales, everyone, they have grown around 25% plus. So all-round growth and very inclusive growth from all the channels, all the many of the brands, and supported well by strong summer. So nice growth.
Mr. Bansali, since you mentioned that, the growth has been supported by the kind of heat wave that we've seen, this quarter, do you expect the same kind of growth to continue in the coming 3 quarters as well for FY25?
Yeah, for the financial year, we expect the same kind of a double-digit growth, and that would continue because the first quarter was witnessed by summer, and then there would be a third quarter witnessed more by winter, and so this seasonality would come in. May have some here and there, but despite this, we expect because of many other steps which we have taken in terms of marketing, distribution, brands, products, and so many things which we have undertaken. And on the top of it, the government has many steps to improve on the rural side. Monsoon is also expected to be good. So all taken together, we expect good growth to come in.
And Mr. Bansali, in terms of your profits, I was just analyzing your P&L and I saw that your cost of raw material has gone down by 15%. So what is the kind of trends that you're seeing in raw material pricing, and what is the kind of outlook that you're expecting in FY25? And on top of that, what is the kind of margins that you're looking at for FY25 overall?
Yeah, so of late the costs have started inching up also, but still they are very benign, and we expect a margin improvement to happen in terms of the gross margins as well. And we would be investing behind the brands, and so it may increase somewhat. Marketing spends may further increase, but despite this, our EBITDA margins are expected to improve a few basis points.
Can you quantify that few for me, Mr. Bansali?
I would like to leave at it.
Okay. Well, and since you already mentioned that you'll be further pushing money towards advertisement and marketing, and your A&P spends have increased around 21% YOY, but overall they've remained the same as a percentage of sales. So if you can give us some idea as to how this entire cost will play out in terms of advertising and marketing.
So as a percentage of sales.
Right. Okay. I think we've lost his feed. But okay, till he joins back, let's take a quick look at what the markets are doing right now. Well, the markets have been under pressure since the record performance yesterday. Nifty 50 is down around 0.8%. But I think we have Mr. Bansali back. Mr. Bansali, I'd like to repeat my question for you. Your A&P spends YOY have gone up by 21%. However, as a percentage of sales, they've remained same. So how is that playing out for you overall?
No, it has increased as a percentage of sale also for the quarter.
Okay.
And for the year, we expect the same may increase a bit based on the kind of opportunity we may witness in terms of the growth. And so, but despite this, as I said, we would be expecting a little EBITDA margin improvement as well, despite investment behind the brand.
Got it. And Mr. Bansali, your strategic subsidiaries, that is your Man company and the Brillare, have been witnessing significant growth in the past few quarters. This quarter also the sales has grown around 23%. So I want to understand that what is the kind of strategy going forward for these subsidiaries, and overall if you can tell me what is the contribution right now in terms of revenue and where will it go going forward?
So this is again a very important pillar for our growth, right. And we expect these subsidiaries, and there would be many other who could be added to this kind of strategic investments. So are expected to give impetus to our growth. And currently last year, for the full financial year, it contributed around 4% to our overall turnover.
Mr. Bansali, one of your competitors said yesterday that they are facing some kind of pressure when it comes to selling of their oil, products. But Kesh King has shown quite significant growth. So I want to understand that, what is working for you, which is not working for others.
Honestly, the category, the discretionary category kind of, and oils also falls within that in this such category. And so, while the market shares have not declined, but otherwise it has that is still under pressure for as an industry and not for only Imami.
Okay, and Mr. Bansali, overall competition, how is it looking like? Both from the unorganized as well as the unorganized space.
Yeah, competition is there and is there to continue to remain from even the new ad channels, the startups also give a good competition. And now many channels have also increased. So there has been a lot of things happening across the industry. And we have to keep ourselves appraised of what is happening around and then adapt for realities. And that's what we are doing.
And Mr. Bansali, just to get an overall view, your revenues in FY24 were around 3,500 crores, right? And your bottom line was approximately 720 odd crores. So FY25, if you can tell us that, where will the number for top line and bottom line go?
As I said, we would be expecting double-digit growth in terms of the top line, and the bottom line also would be aligned to that with some EBITDA margin improvement. You can make out now.
And, overall, we're also seeing that, there could be harsh winters going forward. So do you already have a strategy in place for your products going forward? How will it play out for you?
So it plays well. In fact, we expect good winters to come in, and we have many of our products which are precisely skewed towards the winter, maybe kind of Boro Plus antiseptic cream and Boro Plus face washes and other products, and apart from that, the Chavan brushes. So we have good products which are for the winter, and we are poised for a good growth to come in from that season as well.
And you also mentioned that, discretionary spending has remained under pressure so far, and which is kind of impacting the male grooming space. However, Man & Company has shown a good growth, but there could be a little more upside to that. So I want to understand that when do you expect some recovery? Considering the kind of budget that this time the government has come out with, do you expect that this discretionary spending will go up?
Yes, we expect the same as to improve and in the next quarters. In fact, we are also independently, we are taking many other steps on improving on our marketing and distribution reach there. So it would improve further from here. But on a channel wise, on a product side or a discretionary, it is under pressure. But we are taking all the steps, and with the impetus which is expected to come in from the government, from monsoon, that's going to give a required impetus to this kind of products as well.
Okay, and Mr. Bhansali, overall, from a long-term perspective, we talked about how FY25 will shape up for you. You're expecting double-digit growth. But overall, from a long-term perspective, what are the kind of strategies, new products that you're adding? And overall, also, this is a two-part question. The price hikes that you've taken so far, and what are the kind of price hikes that you're expecting overall in FY25?
Yeah, in terms of this long-term strategy, we would continue to remain in where we are in the personal care and healthcare kind of products. And our base would be mainly on the Ayurveda brand supported products. And
Right. Okay, I think we've lost him again. The connection seems to be a bit patchy. But yes, Imami is under pressure. However, the numbers have been a bit better than what the street was expecting, in fact, in line. However, net profit was a miss as per the estimates. But I think we have Mr. Bhansali back. Yes, Mr. Bhansali, I think let me repeat the question for you. A two-part question. Your long-term strategy for Imami, one thing. And second, the price hikes that you've taken so far, and going forward, what are the price hikes that you're expecting?
Yeah, so on the long-term strategy, as I said, we will continue to remain where we in the personal care and healthcare business. And we would be, because all our products are based on Ayurveda or Ayurvedic, all our ingredients are also based on Ayurveda. And so we are expert at that, and we would like to remain in the regime where we are. And so far as price increases are concerned, we had been very, very judicious. We had never been aggressive in taking any price increases. Around 2% kind of a price increase is average, is now expected in the current regime. And that also will be very judicious.
Okay, and one last question as to any new products in pipeline that you would want to talk about, and any new segments that you would want to foray into.
That's coming out with the new products is always an ongoing thing, and we come out with the new products in general trade and modern and in many of the channels, and but precisely on the digital channels we come out with many premium products as well. So that journey is continuing and would continue. Going forward also the same would remain.
Okay, well, Mr. Bhansali, thank you so much for giving us those insights on Imami, and all the best for FY25. But with that, it's time to slip into a short break. But do stay tuned. We have lots more lined up on the other side.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Welcome, you're watching NDTV Profit. I'm Mahima Vajrajani. Well, Axon Noble came out with its Q1 FY25 earnings. Revenue is up 3.7%, EBITDA up around 4%. Margins have improved a tad bit, and net profit is up around 4.3%. But to break down these numbers further and to get an outlook on how FY25 is shaping up, we're joined by Mr. Rajiv Rajgopal, Chairman and MD at Axon Noble. Welcome to NDTV Profit, Rajiv. My first question to you is that, I believe that the quarter has been a bit subdued, and this is on the back of course, elections and stuff. But I want you to break down how the quarter has been for you as per your expectations, and overall, how has the demand played like?
We must consider the current mismatch between the demand for securities and the supply of securities. The 3.1 lakh crore of net demand for secondary paper brought in by mutual funds, domestic institutional investors, and individuals into the secondary market every year for the past 3 years far exceeds the roughly 2 lakh crore of annual primary market issuance spanning IPO, FPO, preferential allotment, QIP, rights issues, and even OFS. Prolonged mismatch of this nature can leave us with more of asset price inflation rather than capital formation. Anecdotally, the price of over 30% of mid-cap and small-cap stocks have more than tripled in the last 3 years. While there can be any number of arguments to justify these and other prices, we need issuers, including many members of FICCI, to step up to the opportunity, raise risk capital from our willing investors, deploy it and create new businesses and household savings, and hence ensure that capital formation sustains as a virtuous cycle. This is clearly a larger point for a greater debate. Third, there is certainly a need for increased investor education and awareness. My fellow whole-time member Kamlesh spoke earlier about some of the challenges and our responses on that score. However, for today's address, I will concentrate on a fourth and topical area, the growth in interest in equity derivatives in recent times. First, let me be very clear about how SEBI views derivative markets and risk takers. There can be very little doubt that our capital markets ecosystem needs both. Derivative markets, market makers, and speculators aid price discovery, help improve market depth, and provide avenues for issuers and investors to hedge their risks. A healthy derivative market and risk-taking ecosystem aids capital formation. The question is of degrees and balance. That is, ensuring that collectively, the cash and derivative market ecosystem is supportive of both investor protection and market stability, and hence of sustained capital formation. As the consultation paper on the draft FNO circular brought out by SEBI a few days ago on 30th of July points out, there has been a remarkable growth in trading of index options in recent years. While cash market annual turnover increased by just over 2 times between fiscal year 20 and fiscal year 24, index options annual turnover on a premium basis has risen by over 12 times from rupees 11 lakh crores in FY20 to rupees 138 lakh crores in FY24. It is worth noting that index futures turnover did not change that much during this period. What explains this explosion in index option volumes? The proliferation of weekly expiries for index option contracts to a stage where every day of the week has an index option expiry has clearly had a role to play. There are contracts where well over 90% of the trading volume in index options occurs on the expiry day, with a significant concentration in the last hour of trading. On expiry day, all other things being equal, the time value in an option premium is naturally at the lowest, and it continues in the course of the day. As such, progressively through the course of the expiry day, a speculator can buy option structures with a very small capital outlay, which can possibly provide a large profit if the index were to move only by a few points. This optically cheap option premium, which might be as low as a few hundred rupees as we approach expiry time, appears to entice a whole bunch of individuals to trade in and out on expiry day through the day. Trading in index options specifically close to expiry then starts to resemble a slot machine in a casino, with individuals putting coins into the machine hoping to hit the jackpot. Please note, it would be unfair to compare all of equity F&O with a casino and to lose sight of its utility in capital formation. That's not what we are saying. We are talking only about the specific portions of options trading closer to expiry. It's a very focused area as far as we are concerned. NSE data shows that over 92 lakh individuals collectively lost close to 52,000 crores during FY24 in index derivatives, even without considering their transaction costs, which are substantial. 99% of these individuals traded in index option. Only 7% traded in futures. During a different period, the transaction costs stood at an additional 35% of the trading losses as per the January 2023 study, option study of SEBI. The finding of the January 2023 paper that 9 out of 10 individuals lose in F&O trading broadly continues to play out. The offsetting gains largely reside with some sophisticated algo-based domestic and foreign high-frequency traders. This frenzied hyperactivity in index options on expiry day has little discernible benefits while raising several issues. It would require extreme levels of imagination to be able to attribute any kind of constructive support for market-wide price discovery, hedging, or capital formation from this hyperactivity in index options on expiry day. In addition, to put the numbers in perspective for capital formation, the net trading loss borne by individuals during FY24 in index derivatives, as described in the paper, consultation paper, is nearly a third of the net inflows into growth and equity-oriented schemes of all mutual funds during FY24. These are certainly not insignificant and indicate that money that could be put into constructive capital formation is being frittered away at scale. Finally, the frenzied trading on option expiry day also raises questions of market stability and possible vulnerability to manipulation. Market open interest rises during pockets of the last hour before expiry amidst very low option premiums being dealt. If there were to be an unforeseen black swan global market moving event minutes before expiry, amidst this frenzied activity and risk-taking, the resultant impact on the overall market ecosystem can be substantial. As a regulator, we are conscious that we must not throw the baby out with the bathwater. When it comes to the frenzied trading in options nearing expiry, however, it is very difficult to see any baby in this bathwater. In short, a primary regulatory intent now is to specifically curb only this expiry day frenzy in options trading and to reduce the systemic risks arising from this. 5 out of the 7 proposals of the July 30th consultation paper, i.e. restricting the number of weekly option expiries, increasing margins around expiry day, removing the benefit of calendar spreads on expiry day, requiring the monitoring of intraday positions, and rationalization of option strikes are centered around this objective. The 6th proposal to increase lot sizes is simply to reset them considering the movement in markets since they were first set up. The current lot size of 5 to 10 lakhs was set in 2015. Markets now are 3 times of the 2015 levels. The corresponding increase in lot size is unlikely to impact index option trading per se, since the option premiums are typically a tiny fraction of the notional. However, note that futures carry risk too, by virtue of their inherent leverage. Incidentally, while already far fewer individuals tend to trade in futures than in options, given the lower outlay required for options, the SEBI F&O study of January 2023 shows that the average net loss made by individuals is almost identical, both in futures as well as in options. It's not that one is better than the other. The 7th proposal, the explicit requirements that brokers need to collect option premium from investors that are buying options, is simply a matter of basic hygiene. It's nothing, earth-shattering there. Through all these 7 proposals, we have taken care to ensure that the steps do not restrict avenues for trading, market making, or hedging in the broader F&O ecosystem. Any number of contracts can still be launched with monthly expiries as before. These provide ample room and scope for hedging and trading and speculative activity. we only propose to specifically address the issue of hyperactive trading on expiry day options and reset derivative lot sizes to account for the movement in markets over time. Naturally, the process does not end here. Even after the current consultation and the final steps that are eventually taken in this regard, we will continue to monitor activity in F&O markets and in a consultative fashion consider fresh steps, both developmental as well as regulatory, as necessary. In addition, both the expert working group for F&O and our secondary market advisory committee will debate other structural issues relating to derivative markets, including ensuring that we are measuring and monitoring risks accurately and ensuring that there is some balance and connect between the underlying cash and derivative markets. As ever, we remain open to other suggestions from all market participants on ways to develop the F&O market better to ensure that capital formation ensues. Finally, and in summary, I offer some personal observations around the process of regulation that our capital markets ecosystem follows. I wish to compliment members of the market ecosystem for their engagement and constructive involvement in the regulatory process. The expert F&O working group that we have constituted under former RBI Executive Director G. Padmanabhan has members from key market infrastructure institutions, brokers and broker associations, investor representatives, market participants, academics, and other experts. The Secondary Market Advisory Committee, chaired by former SEBI whole-time member G. Mahalingam, has similar wide representation. For some of the members of these groups, it can be argued that some of the proposals may have short-term negative revenue implications. Despite that, we have found that by and large, our market participants are mature and are able to take the broader perspective of what is in the best interest of our ecosystem. Independently, many of them have been taking sincere steps to enhance investor awareness and to manage overall risks better. This is truly appreciated. I strongly believe that while the steps that we take to enhance investor protection, preserve market stability, improve market efficiency, reduce risk, and enhance transparency can appear to have short-term negative revenue implications for some,
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome. You're watching India Market Close. It's been a rough day for the markets. A completely rough day, at least on the front line, and it's continued to show weakness. I would say maybe a slight recovery from the worst levels of the day for the Nifty. Story really in the Bank Nifty today, where you've seen a much better recovery. In fact, the same range as yesterday relatively, but the Nifty has had no respite. Let's just pull up the intraday for the Nifty and the Bank Nifty to give you a sense of what kind of a day it has been. A whole host of reasons, of course. Global cues largely. India is mirroring what you're seeing across the world right now. And you continue to see that weakness all through the day. We're not too far from the day's lows also right now as we speak. Let's look at the Bank Nifty though, and what the day has looked like for the Bank Nifty on the back of some very specific stocks. So a bit of recovery here on the Bank Nifty, relatively speaking, than what we have seen on the day. HDFC Bank is one of the reasons, and you'll see that picture when you pull up the heat map today. What has been hurting and what has been working. HDFC Bank, they're single-handedly really giving some spots of green and optimism in the market. Divi's, Dr. Reddy's, Sun Pharma, very, very defensive play. Sun Pharma, all right, had their numbers come out as well. Kotak Mahindra Bank to some extent. Nestle Britannia holding up. But the autos are the ones which have really hit a speed bump today. Eicher, Maruti, Tata Motors, M&M. Now, admittedly, this is one pack which ran up quite aggressively, and so maybe you are seeing a bit of a pullback. You have a variety of reasons. Sales numbers which came in for July were less, less exciting than what the street had perhaps expected. But you're seeing quite a hit in some of the IT names as well. Look at Wipro. Wipro down 3% is really hurting today. Metals is the other space. Hindalco, JSW Steel, Tata Steel, all of them hurting. Now, like I said, this is part of a bigger global picture. So I just want to pull up for you what European markets are doing right now, and we'll see how some of the Asian markets have closed. This has started from the weekly jobs numbers which came out in the US yesterday, showed the numbers very weaker or much weaker than what was anticipated. Fears of a recession have sparked off. The big story behind that is, did the Fed wait too long to even start talking about interest rate cuts? And has there been a pain point there? So you had that slide overnight in the US. You're seeing that continuing. I mean, the Nikkei was down 6% today. We'll just pull up Europe just for a sec to see if that story continues. And yes, it does. Across the board, you have red and, of course, India mirroring this as well. Let's just pull up the advanced decline ratio also very, very quickly to see, what is hurting. And there you have it. Quite a tough day. It's actually broader markets seem like they are improving right now. I don't know. Something seems off here. But yeah, it's been a rough day overall for the markets, definitely. In terms of sectoral indices, and we'll come to the broader markets as well. Harsh will come in with some of those names. But in terms of sectoral indices, if I pull up, it's a pain point around the way. Realty, definitely getting hit. Back of some numbers as well. Auto, metal, all of them seeing pain point. Metal, of course, part of the bigger story. If there is a slowdown, consumption or demand goes down as well, and metals get hit. But yeah, it's a tough afternoon, Harsh.
Absolutely. Even in the broader markets, especially where you're seeing pain points, especially in certain pockets. First off, me take it straight to results reaction. Ratan India Power, let's pull that one up. 3.5% higher. Look at the positives first before we go on to the negatives. PSP projects, very healthy pipeline continues to build with regard to orders coming through. Almost 3,500 crore worth of orders in this quarter. That stock is up 2.5% odd. But let's take a look at now the losers. Repco Homes to start off 6.5% lower. You have GR Infra 5% down. Tata Motors sulking in trade 4% lower. Nifty 50 counter. You have Triveni Engineering down nearly 4% as well. Somani Ceramics was a miss overall, 3% lower on that one. And you have Saregama and Paradip Phosphates, both of which are down 2% odd in trade today. Let's take it to some names, especially which are gaining on the back of news. Shakti Pumps, new order win. I think 12,500 odd pumps being ordered. Up 5%. That one's sitting on an upper circuit on a day like this. So that's one. KPI Green on the back of that buyback announcement, I believe 4.4% higher. You also have Morpan Labs, which is up nearly 4% as well. You have Alembic Pharma up 2.5%. TTK Prestige again on the back of a buyback. Morpan Labs is on the back of a QIP which they are doing. TTK Prestige on the back of a buyback, Symphony on the back of a buyback. Those are some of the buzzers in trade. Let's quickly look at the top gainers on the Nifty Midcap if I can before I move on. You have a Paytm, very interestingly. Paytm is up 6.5%. Likely a rub-off effect of Zomato, one of the reasons. Let me pull up also a Nykaa, up 5%. A Suzlon is up 5% for totally different reasons. PB Fintech is up 3.5%. So all of these fintech platform entities are doing fairly well today.
I'm surprised you didn't talk about Zomato. The reason why all of them are because
so that's talk of the day. Tamanna, we'll get to that.
No, but that's because that is the outlier, isn't it? That is the outlier,
yes.
Which is completely defining or defying all the trends that we're seeing today. Zomato is a very, very interesting story, and we will have a more detailed conversation and an analysis ahead on the show, whether it's all hunky-dory for Zomato or if there's a different side of that story. Yeah. Any more stocks you want to add?
Yeah, I mean, within the auto pack in the mid-cap space, you have an Escorts, which is not doing so well. FMCG names, something like an Imami, not doing well at all, 5% lower. So let's pull up in the same breath even a Dabur declared numbers yesterday. Again, may not be absolutely languishing, but 2% lower on the back of a steady, or if I may say, strong set and the rural recovery play, 2% lower in trade today. So you've got plenty of spaces, sectors which are battered despite the outlook looking fairly good till, in fact, yesterday close. Tamanna.
Just a quick word on the numbers that are flashing on your screen. Hindustan Zinc has just come in and first cut over there. Net profit up about 19.5%. So that's just the first line we have. We'll get more details. I'm seeing a sudden spike in the stock as we speak and building rapidly. So H Zinc numbers are good on the face of it. Again, it's an outlier in terms of what is happening with the entire metal space. But let's get in our conversation started with Brijesh Singh, opulent investment advisor, who's joining us now on the show. Very good afternoon to you, Brijesh. Great to have you on. Just on the market mood. Now, very clearly, we're following global trends, but we have enough of our own factors, which is leading to this kind of a pain point. Just your levels first on the Nifty and the Bank Nifty.
Good afternoon, Tamanna. See, overall trend, till yesterday everything was fantastic. We had been talking about the higher level Nifty might cross 25,200 and followed by 25,500 and all this stuff. Now today we have seen a gap of opening. Now this gap of opening has been continuing still. There is no sign of any sort of recovery from where we can see okay the selling has been absorbed and the morning low, which was made of 24,723, that low would be intact and we might see another layer of upside. Nifty is on the hourly chart is still trading below the shorter term moving average, which has a value somewhere around 24,890, or I would be saying 24,910. So till this level I would be using this level. Till this level doesn't cross on the higher side, any short, any long should be used to go should we go for the short, keeping that thing at the stop loss. Now I feel that this level of morning panic low would be breaking, and Nifty support to watch would be 24,650 to 24,680 level. Anyhow, if that thing breaks, then the previous swing low, which was the previous level where from where the rally started upward, that was 24,400. That should be kept in mind. So downside, two support levels are there: 24,400. And immediate support, if I talk about 24,650 to 24,680. Now the only point here right now why Nifty is not going down is if we look out the Bank Nifty, still it's not giving any sign of negativity. Still it has been holding. If we look at the hourly chart now, in that hourly chart, still it has made the higher lows formation, trend line breakout has been there, no doubt. the bank index is trading below the longer term moving average, but the previous swing low of 51,180 around, it has not been broken. So till the time this level doesn't break, we don't think that Nifty would be breaking the downside level which we have talked about. So immediate support for Bank Nifty has been considered, then 51,100 would be coming. If any of that thing breaks, then the panic low to watch would be 50,600 mark to 50,700 mark. Whereas on the higher side has been considered, it is finding selling pressure at 51,800, 52,000. So I feel that Bank Nifty should consolidate in the range of 51,000 to 52,000.
51,000 to 52,000 is the range on the Bank Nifty. Frankly, the Bank Nifty story is an HDFC Bank story. I have no two thoughts about it. Whatever you're seeing, or whatever kind of benefit you're seeing on the key index, is also because of HDFC Bank. Let's just pull up Nifty contributors for a second to see what's happening there. And HDFC Bank plays an interesting one because it's the day after the Bank Nifty expiry. Our top contributor right now to the Nifty as well, followed by Kotak Mahindra Bank. Brijesh, before we get your view on Hindustan Zinc, Zomato, etc., let's just get your top picks today.
Okay, so there are two top picks. One is on the sell side, one is on the buy side. I'll start with the sell side. First stock to watch would be from FMCG pack, that is Marico. On Marico, if we look at the hourly chart, stock has been trading below all the important moving averages, whether that be short term and medium term. It is trading below that. Trading near the day low also, 663 around the stock has been quoting. So any rise towards the level of 665 and above, one can take a sell side in it, keeping a stop loss 674, play for the target of 650. Time frame to hold the counter would be 1 to 2 days. Another call, which is on the buy side, the stock had formed, that is Chambal Fertilizer. The stock had formed the rounding bottom formation and it is eager to break on the higher side. So somewhere around 527 around, if a stock trade or below that level, one can take a buy call in it, keeping a stop loss of 580 and then play for the target of 548 to 550. Time frame to hold the counter for this would be 3 to 4 trading sessions.
This Hindustan Zinc numbers are just looking astonishing, and I know you're looking at the details. Harsh, we're going to get Agam up in a minute to talk a bit about it as well. But look at the spike in that stock. Your net profit is up 19.4% at 2,345 crore rupees. Revenues have jumped up 11.6% at 8,130 crores. Your EBITDA and your EBITDA margins are also good. Your EBITDA is up 17.9% and your EBITDA margin has gone up from 46 to 48.5% as well. So Hind Zinc, now slid down a bit after that initial rush up, but those numbers on the face of it look pretty good.
Yes, they look good, Tamanna, but two things that one would really need to be cautious about or keep in mind is the mineral tax changes. If that Supreme Court ruling were to go through or get implemented, the impact of that, at least just looking at the financials, nothing here on that. Maybe the fine print may have it, or maybe I've missed it. Either way, but that's something I would really keep my eye out on, and we'll try to pull out those details. I'm sure Agam will be looking at that as well. And outside of that, of course, the positive is that the EBITDA number has gotten better. This is of course off a slightly higher base, so it looks like a fairly good set from Hindustan Zinc right off the bat. Of course, some bit of cool off seen in the stock already. Let's also pull up a Vedanta because that one owns Hindustan Zinc. What's Vedanta doing in trade? Well, no action there.
Yeah.
So
let's see if Brijesh has a view on Hindustan Zinc on the charts. Brijesh, are you tracking this?
So if we look at the Hindustan Zinc, on the shorter term time frame, say 4 hourly chart, still it's been trading with lower tops and lower bottom formation, and the medium term moving average value comes at around 657 around. And if I'm not missing stock, when this thing result came, it made a high of 659. Again, it has cooled down. So the only thing is, if it crosses this level of say 657, then one can take a buy call in it with keeping a stop loss of 632 and play for the target of 677 to 680. Otherwise, we have to wait. I feel that that the level of 655 to 660 zone would be tough to cross Hindustan Zinc.
Agam is also joining us with a little more detail on what's worked for Hindustan Zinc. Yes, Agam.
Right, so well, we do know that the top line has seen a near 12% growth on a year-on-year basis on account of volumes which have come through the course of the quarter. A lot of that is on account of zinc volumes, but let's not forget, even in terms of their performance with respect to silver, it's been fairly substantial, and that has actually led to your top line growth of around 11.6% to be precise. We've seen a considerable expansion in your operating margins. In fact, 250 basis points to be precise, coming at around 46.5%, and consequently your profit has grown as much as 19% on a year-on-year basis. A couple of reasons here behind the expansion in your operating margins. One is that you're actually looking at a temperance when it comes to fuel costs. Secondly, even in terms of your increase in employee costs, that hasn't been as substantial. So on an operational basis, these are some of your variables which are actually playing in favor of margins. Also, it has to do to a certain extent with respect to pricing of their zinc products, because if you actually look at the segment returns for zinc, they've seen a good amount of growth in comparison to the consolidated picture. And let's not forget, silver has also come through when it comes to that contributing to that expansion in overall operating premiums. That's possibly also the reason why we are looking at that expansion in your EBITDA margins and that consequent impact as far as the bottom line for Hindustan Zinc is concerned.
All right, thank you for that, Agam. Thanks for those insights. Of course, both zinc as well as silver leading the charge with regard to where Hindustan Zinc's numbers are. Let's move on though. Stock of the day, Zomato surely spikes to an all-time high following very strong first quarter numbers as well as commentary. And it's also given a sort of bullish sentiment for brokerages. Most brokerages have upped their target price on Zomato. However, there are risks investors should be mindful about, including the risk of valuation or overvaluation. Now, to try and dive deeper into this, try and get a clear picture of what Zomato's prospects are, why it's gone up, and what could the potential risks be. We have both Mahima and Varsha joining us to break that down.
Right, Harsh. So, I'll take up the bull case for Zomato. Well, Zomato has zoomed in trade today, and a couple of reasons. Firstly, it came out with its Q1 earnings where revenue was up 18%. EBITDA has significantly improved from that 86 crores to 177 crores. Net profit has grown 45% and margins have doubled from 2.4 to 4.2. Overall, if we see segment-wise performance also, quick commerce has grown 22% QOQ. However, if we see the YOY performance, it's grown 2.5 times. And even if we see the food delivery business has grown around 12% QOQ, however 45% overall YOY. And if we check the monthly transaction user for food delivery, it's grown around 16%. Gross order value has grown around 10%. And if we see the gross order value growth, first we'll go to the segment-wise performance for monthly transaction user for quick commerce, that is Blinkit, it's grown more than 100%, and the gross order value around 4%. And overall also, if you see, in terms of what is playing well for Zomato, it's the Blinkit play that is working. The contribution to revenue from food delivery is around 46%, but Blinkit is now 23% of total revenues, which has grown from 15% in just 1 year. So, this is the major reason why Zomato has turned overall profitable and has seen such a good growth. But Varsha, there's also Swiggy coming in with intense competition. What do you have to say?
Yes, Mahima. So what all you said is actually appreciated, but one needs to think that Swiggy is coming with its IPO. The issue size is around 10,000 crore, and Swiggy is giving good competition when it comes to food delivery and quick commerce to Zomato as well. Even we have Zepto on the table, which is actually giving good competition. And if one has to see the numbers what Swiggy has posted, so revenue from food delivery and quick commerce has increased almost 35% in FY24, while if you see operating losses dipped from 2,500 crore to rupees 1,500 crore. And also according to some reports, for example, Macquarie sees increased competition for Zomato. Now this is on the back of JioMart coming with food grocery delivery, which is they're going to plan to offer in 30 minutes. So this is one of the risks that Zomato have. And now back to you.
Right. So while there is some kind of competitive intensity when it comes to Swiggy coming out with IPO, but I think when it comes to the quick commerce space, Blinkit has an upper edge because of the kind of guidance that the management has said. They're increasing the dark stores. They've guided that they'll increase the dark stores to 2,000 from the current 663 mark. And overall also, the kind of speed with which Blinkit delivers right now is much faster than what Instamart and JioMart is doing right now, and the kind of expansion that Blinkit has right now in terms of dark stores is much higher than these platforms specifically. So first thing that, and management has also guided that they are expecting 20% growth in the near term in the food delivery business as well. Plus, in the start of the show, Harsh also mentioned that brokerages are also bullish on the stock. If we see Citi is extremely bullish given a target price of around 270. It estimates FY24 to 27 estimates food delivery growth, GOV growth, that is the gross order value growth, at around 20%, and that gross order value growth is estimated at 50% plus CAGR for the quick commerce. Moving on. They've also said that they expect consolidated adjusted EBITDA to grow at 55% of CAGR, which is quite a significant number to grow at. Moving on, we also have a couple of brokerage notes which are again bullish on Zomato. Nuvama has valued the food delivery at $14 billion, and quick commerce, that is Blinkit, is not far away. They valued it at around $13 billion. We also have CLSA, which has raised its earnings estimates by 6 to 36% for FY25 and 27 estimates. And CLSA is one of the brokerages which is extremely bullish with a target price of 350, which is almost a 47% upside from its yesterday's closing. And they've said that the target is an equal weight blend of both DC and the FY26 PE. And overall, if you also see, Axis Capital is also bullish. They've given a target price of 287, and they've raised the FY25 to 27 estimates top line by 7 to 12%. So despite the kind of growth that Zomato has seen today, brokerages are still bullish. But Varsha, the valuations right now for Zomato do look expensive.
Yes, absolutely. So if you see from valuation perspective, if I even consider price to sales, at current valuation, at current multiple, it is trading at 18x. Even if I have to consider FY26 numbers, we are actually giving 8x of basis FY26 numbers. Now, I was just one of the hedge fund managers also mentioned, that it will take 230 years to recover your money. Basis, FY24 numbers that Zomato will be posting on an annualized basis, and considering price to sales, it will almost take 15 years to recover your money. Now, if you see, also one of the things that I think that is a bear case when it comes to Zomato, that the growth Zomato has beyond tier 2, tier 3 city is like, there's no growth beyond tier 2 cities, because I think at some point of time the growth for Zomato will be finite. I don't think so that Zomato will have 2x or 3x fold after it will achieve a certain market share.
Right. So just to conclude, while the stock has literally zoomed in trade today, valuations do look expensive for the stock, Tamanna, as of now.
So I think between the two of you, I don't know who won, but definitely Mahima seems more convinced with the bull case than Varsha does with the bear case. Not completely. Yeah, valuations are high, but then that's the story for everyone, isn't it, Harsh? I mean, if you throw a stone, you will hit several companies whose valuations are astonishing right now.
No, you're right, Tamanna, but just to contextualize this, annualized current, Q1 PAT is around 250 crore. If I just annualize that, which isn't the best metric to look at Zomato. But if I were to annualize it, that would be 1,000 crore. It's trading at 2.3 lakh crore in terms of valuations, which is 230 times. So that's one. Second is it operates on a very thin margin.
Yeah.
It's a service-based entity which operates on a very thin margin. So the argument will always be that product will have to be purchased and thereafter onward sold, and the margins will always be questionable because you will have
look at that one Blinkit figure which Mahima put out. Your order numbers have grown 100%. Quarter on quarter for Blinkit, but your GOV, your gross order value, has grown only 4%.
Correct.
So more people are ordering, but they're ordering very, very small ticket items with very little margin. So you're going to have more people using your product, but are you going to make more money off it or profit off it is the question.
Yeah, so to that, and to contextualize this, so whenever a new user gets onboarded on a platform, generally his sales will not be value accretive to the organization, and therefore holding up order value despite 100% new users, maybe off a low base, may not be the best way to look at it. I mean, I'm not sure if I'm making my argument clearly.
Batao.
So say you have 100 users, they double up to 200. The incremental 100 users will only be testing your platform.
So exactly
so
what
their
I
order
said.
value will not be massive.
So exactly what I said. More people are ordering, but they're ordering very small ticket items.
Yes.
And you're still spending the same money. You can't charge them a higher delivery charge, right? Whether I order one toothpaste or whether I order a whole bucket of things. Anyway, Sudeep Bandyopadhyay is joining us in, and let's see if he wants to get in on this debate. Sudeep Bandyopadhyay of ND Trade Capital with us. Very good afternoon to you, Sudeep. Tough day for the markets, but we're talking about Zomato, which seems to be on its own trajectory today. Your take on some of the points we've been debating here in the newsroom?
Well, Tamanna, very interesting points which we have been debating. I just put one little different version of this debate. I think we are looking at Zomato's today's numbers and trying to extrapolate how many times sales and how many times what P multiple and all that by putting figures. But I think what we are all banking on is the massive growth which is possible for Zomato, and I think that growth is predominantly coming through Blinkit. Yes, Blinkit, as you were rightly arguing, that the new orders are not of similar value as the older orders and all that. So if the number of orders goes up by 100%, the GOV has gone up by only 4%. Absolutely right. But the point, the way I look at it, I think this business is growing at a scorching pace. And I think this growth is going to continue in the foreseeable future. It's just sheer convenience. And I agree with the argument that beyond tier 2, tier 3, there may not be life for these services to a great extent as things stand today. But I think we are progressing, country is progressing, and we are getting more and more industrialized, and people are moving to cities and all that is happening. So at least for the next foreseeable 5-10 years, there will be huge amount of growth which a Zomato or a Swiggy or the others will clock. Now, under these circumstances, we can of course argue that whether Swiggy will get an upper hand, whether Zomato will get an upper hand, whether Big Basket, which has got a service, they will gain momentum, whether Jio Mart will gain momentum. These competitive intensity will be there, but that this segment will witness scorching growth, that is undoubtedly true. So I won't extrapolate that kind of valuation with the current figures. I will look at the growth and the rate at which this business is growing and try and ascribe a value to it. So I'm positive on Zomato as things stand today. Well, I may not be subscribing to a 350 rupee valuation as somebody was mentioning earlier today. But yes, at this stage, Zomato looks good.
Okay, CLSA 350 rupees is the target price which they've given. Brijesh, let me come straight to you. With regard to charts, would you wager a trade?
So see, already from a level of 146 around, stocks had moved up, to the level of 278. I was just looking, with the higher tops and higher bottom formation. Recently, since from morning, gap opening has been there, and still it has been hovering around the intraday high. Now presently 230-35 zone is a nice support level, that is one point. But buying at the current rate, I would be avoiding because risk reward ratio doesn't favors me. So if it trades somewhere around 250 and below, then one can take a buy call with keeping a stop loss of 230 and then play for the target of 285 to 290. This I am looking for a short-term time frame. So if someone has a view of say 2 weeks, 2 or 3 weeks. 350 on the chart, I don't feel so right now.
Okay, thank you so much. We're going to slip into a very short break. Stay tuned. We'll take, of course, we'll analyze some more stocks on the other side of this break. We'll look at the auto sector and we'll quiz our guests on the same. So stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me.
Welcome back. You're watching India Market Close. No, the picture hasn't gotten much better. And worst hit, I would say, among all of it is the auto pack. Let's pull up the Nifty auto and just show you what's been happening there. Very, very rough day, about 3% down now. And a whole host of reasons for this. Gurmeet Chadda, Managing Partner and CIO of Complete Circles, joining us to speak on, what is happening in the space. Very good afternoon to you, Gurmeet. How the tides have turned in just a matter of the same week for the auto companies. Post Maruti numbers, there was a lot of enthusiasm for all of these companies on a Zoom, and you're seeing the absolute reversal today. Do you think that the July sales merits this kind of concern? Of course, broader factors included as well.
No, absolutely. I think if you see the run-up, Tamanna Nifty Auto Index in last 5 years is almost up 3x. It's almost 280 to 90%. If you see, for example, our two-wheeler numbers, for example, we are clocking about 1.3 crore kind of two-wheelers. This is roughly the same number which was there pre-COVID. In fact, it's slightly lower. I think it's shade lower than 1.3. It's closer to 1.2. Even in the four-wheeler segment, I think, look at the way Tamo, M&M, even Maruti after consolidating has done. So I think it's some bit of a valuation check in my view, and as you rightly said, other macro and global factors weighing down on stocks, which have run up a little more. Also, typically, although it is not very related and established, typically a large IPO in one pocket typically might lead to some profit breaking in other players as well.
Are you putting this down to the Ola IPO, which was open today?
No, I'm not linking it. I'm just saying typically the timing part of it, right? You also have a Hyundai IPO, pretty soon this year. So There could be some bit of a, reallocation which can always happen. But as I said, I'm not linking the two. I'm just saying there is some bit of valuation check, some bit of global news, and some bit of numbers telling you. Also, now you have a bit of a lean season before, the festive season really comes in. So there's maybe some bit of profit booking because of that as well.
All right. I'm just trying to understand from you, Gurmeet, from an auto perspective, if I were to look at a 2 to 3 year perspective for auto, we've seen a significant run up over the last year or so in the Nifty auto. Do you believe valuations are fair? Do you believe that rural turning around could possibly aid one specific set of stocks, say a Maruti, say two-wheelers, versus another? What should one look at the moment?
See, I think long term, I don't see there's any issue. If you see 90s, India and China almost sold the same number of cars. Today, China sells maybe 3 times, 4 times more. And as, the per capita GDP picks up over the next 5-6 years, I think, they say that apna ghar, apni car is the 2 biggest goals every Indian middle class household has. So I don't see that as a reason. Obviously, the trends are changing. So, if you see, it was sedan, and that's when Maruti used to rule. Now, almost 7.5 out of 10 cars sold are SUVs and MUVs. And that's why if you see M&M's numbers, M&M is actually now on the SUV in terms of volume. They have almost 21-22% market share, backed to by 5 successful launches. Even in Tata Motors, I think if you see the RR number, the GLR numbers, especially the Range Rover variants bookings they have, they're clearly pointing out to that. And obviously the premiumization playing out. So I don't see any challenge as far as the long-term outlook is concerned. But near-term, because of the sharp run-up in a lot of these names, I think there is some valuation discomfort. Also, the auto ancillary value chain, I think that's where probably you'll see more opportunities than the frontline OEM manufacturers. We have had Ukraine going into war, so your traditional IC engine part, auto ancillaries, has seen huge disruption. A lot of companies are running at, they're at a very sweet spot as far as operating leverage is concerned, whether those are companies in tooling, fabrications, forgings, across the value chain. So I think auto ancillary is something I am a little more constructive on. So we are constructive both on the convenience portfolio, which is your switches, horns, lightings, etc., where we have a lot of operating leverage. Then you have the value-added portfolio, which is infotainment systems, touch screens, the software electronics parts, and the car electronic part, which is gaining more traction. And then you have the software side of the car, which is where the likes of KPITs of the world, play. So pretty more constructive there. But in the near term, yes, I think two-wheeler companies and tractor makers may get some bit of traction as rural recovery plays out.
Just last point, what would be your favorites in this space? OEMs, two-wheelers and auto anchs, if you had to pick one or two?
So auto anchs obviously at number one. We have Uno Minda, we have Sona BLW, Sandhar Technology, which is obviously the market leader in locks and smart locks, as well as they make frames for some of the leading bike sellers like the TVS Raider. So that's part of our portfolio. And we have KPIT, which I call an auto tech, or not, and then we have, the four-wheeler names. And between four-wheelers and two-wheelers, it's more about, allocating where we find more valuation comfort. So we have M&M, we have TVS, and we have Tata Motors in the portfolio.
Okay, so those are some of the auto companies to keep an eye out on, but a rough day on the street for Autopack, undoubtedly. Thank you, Gurmeet, for speaking with us. Now, we're also looking at another player coming in. Ola Electric's IPO is open for subscription from today, and the retail portion has been fully subscribed on day one. Tushar joins us with the latest update. Yes, Tushar?
Thank you, Tamanna. So overall, the Ola Electric IPO is now subscribed about 30%. The retail subscription is about 1.36 times. Employees have picked up about 4.36 times the shares that were allotted to them. There's negligible change in terms of the NIIs and the QIBs picking up stock at this point of time. Ideally, they come in towards the later half of the IPO. Remember, the IPO was open till the 6th of August because of the weekend in between. So we may see in the NIIs and QIBs picking up stock about on Monday or Tuesday. Now, what is more relevant at this point of time is the anchor book of the company. So yesterday, about mutual funds picked up about 40% of the anchor book. Overall, anchor investors picked up about 2,763 crore worth of shares. That is about 36.35 crore shares have already been picked up by the anchor investors at 76 rupees per share. That's the upper end of the price band. Mutual funds, again, 40% of the anchor book. 2,763 crores already raised. Remember, the full size of the IPO is about 6,140 crore rupees. That the valuation is at about $4 billion. A total of about 80 or 82 crore shares are on offer in this IPO. So how the response, if the response from the anchor investors actually sustains, we are looking at a pretty decent subscription number for Ola at the end of the IPO. Tamanna.
Okay, so day one has been decent. The retail portion fully subscribed. That's the word on Ola IPO. Sudeep, not sure if you have a view here.
Well, I think they are definitely the leading the EV two-wheeler manufacturer in the country at this stage. But this is a very, very fluid space. There are too many things happening at this stage. Ola also has a large plans. Their plan of producing their own batteries, I think, is very interesting, and that should give them some comfort going forward. But at this stage, it's very difficult to comment on the future of this entire space. So from an aggressive investor's point of view, yes, it is worthwhile taking a bet in this. But if you are conservative, I would recommend you wait and watch.
Okay, that's the story on the Ola IPO. But meanwhile, let's look at what's happening in the markets. Is there an improvement? Not really, I would say. It's still looking like a tough call for the markets. I mean, what is next week's play and what is next week's strategy? Let me come to Brijesh Singh on this. Brijesh, I'm not sure if you do an STBT call or what you would do at this point, but how would you set the stage for next week?
Still trend look bearish. When the show started, that time Nifty made a low was 24,723. That had been broken. It made a low now of 24,685. It is in the process, in 15 minutes, it is in the process of making a hammered sort of formation, and we all know whenever the hammers form, it is known as the reversal. But if you look at the longer term time frame, or just say hourly chart or say 4 hours, still the trend is not that much promising. So if someone wants to go short for a STBT sort of thing, they can do it. Maruti looks still weak, at 12,732. If someone wants to play, then present rate can be used to go short with a stop loss of 12,900. Play for the target of 12,550 to 12,600 odd level.
Yeah. All right, we'll take a very short break. We'll come right back. Interesting call on Maruti Suzuki, considering that it's seeing quite a tough day. Cummins is the other stock that we need to talk about, down about 8% right now. More details on all that and more when we return.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
welcome back. You're watching India Market Close here on NDTV Profit. We have Brijesh and Sudeep with us. Sudeep, let me come straight to you. So Brijesh gave his piece with regard to what he expects next week. There's plenty happening on the global front, including global macros. What's your expectation, anticipation going into next week, going into August as well? What can one expect from markets? How are you looking at markets overall, top down, just in terms of valuations as well as with the global macro setup?
Well, Asha, I'm positive on the market, and I believe that the positive momentum in Indian capital markets will continue. There are a couple of factors. One is, of course, the sheer liquidity. I think the domestic investors are bringing in 22,000 crore per month via SIP, and another 25,000 crore is coming through other route into the market from domestic investor. So we have a kitty of about 50-60,000 crore incremental coming into Indian markets every month. Now, on top of that, I think US Fed indicating clearly that rates will start coming down from September definitely will encourage the FIIs to also start looking at India. They haven't been, in fact, they haven't really invested much in India yet in this calendar year. So that also should happen. Now, the joker in the pack, of course, is the geopolitical situation. Now, if that really worsens and there is some major flare-up in the Gulf or in West Asia, I think that will lead to some challenges in the market for some time. But again, I believe that if that happens, that will be a great opportunity for picking up shares, taking the opportunity of the dip. Because I think fundamentally, Indian markets are in a very, very positive zone, and this momentum should continue in the foreseeable future. So yes, there will be ups and downs, challenges here and there, but trajectory will be upward.
Okay, trajectory upward, still bullish. One of them, Sudeep, is HDFC Bank. What do you make of the move? Last couple of days has been doing very, very well. 2% yesterday on a tough day of trade, 1.5% today as well.
I actually sometimes wonder why it was not going up earlier. I think there are all the ingredients. I shall look at it this way. Now, if you have seen this, of course, you have seen the results of banks. The banks which were doing very well, their asset quality improvement is not there, because I think they have reached a level where the asset quality improvement is at saturation. Further improvement is unlikely. And the banks which had asset quality challenges, PNB, Bandhan, their asset quality has started improving. So I think the story is asset quality improvement, a possibility is not there. So what is going to happen in future is the loan growth, and the backbone for that is going to be the CASA, the deposit mobilization capability of a bank. Now, which banks can mobilize deposits cost-effective way? I think that these are the banks which have got large network and a well-entrenched branch banking system. So an HDFC Bank, an ICICI, SBI definitely will have an advantage in the coming days, where cost-effective deposit mobilization will be the key for success and maintaining NIM or growing NIM. Now, under the circumstances, HDFC definitely well positioned. They had their challenges post merger with HDFC, but I think they are moving away from that and consolidating and becoming better and bigger.
Okay, Sudeep, thanks for that. Sticking with banks, State Bank of India expected to declare its numbers at probably tomorrow, somewhere in the afternoon. And net interest income expected to be up just about 7% on a year-on-year basis, flat sequentially, likely some margin pressure, contraction expected. Operating profit, again, just about 1% higher on a year-on-year basis. Provisions also on a lower base will go higher. It was at roughly 1610 crore, 1610 crore at the end of Q4 FY24. That's a very, very low number for the kind of size that SBI has. Unrealistic to expect that, but likely something around the 3000 crore mark is where provisions are expected at. Profit after tax expected to be up 9% year on year. So that high base of 20,000 crore plus in Q4 likely won't be matched. Asset quality expected to remain flat, but you will look out for those pieces of information on unsecured that SBI seems to be seeing on ground, because SBI does have that kind of reach that no other bank has, which will give us a broader assessment on what's happening on ground. Also, corporate capex and growth there. how significantly is growth going to pick up, what the expectations are, will be the other focus area. In terms of growth, just above 1% on a sequential basis, loan growth expected, which translates to roughly 16% YOY growth, and deposits just below 1% growth. So roughly 49.5 lakh crore of deposits. Everyone watching out for that crucial 50 lakh crore mark where SBI is concerned. That's around a 9% year-on-year growth. But I wouldn't be too bothered about that because they showed strong growth in Q4 FY24. So sequentially, the numbers may be slightly soft. But otherwise, SBI expected to deliver another solid quarter overall. Sudeep, I'll stick with you. Just with regard to SBI, this has been a rank outperformer in terms of the way stock price has moved as well as profits have moved. Do you believe that, are you constructive on SBI even at these valuations? What should one do?
No, absolutely. As I was just mentioning, I think they will be very well positioned in the new environment where deposit mobilization will be the key to success. And SBI, as we all know, with the kind of branch network they have, they are very, very well positioned. So SBI definitely remains one of the favorite banking stock as far as we are concerned. We are also positive on its subsidiaries, which does in a way contribute to its overall growth momentum. And at some stage, some disinvestment from some of the subsidiaries will help it to improve its capital adequacy as well.
Okay, Sudeep. Brijesh, if I can come to you on charts with regard to SBI specifically. Are you liking this one on charts? The run-up has been steep, but we've seen a bit of a cool-off, 5% down now from those highs.
See, daily chart as well as the shorter-term time frame growth chart, whether we look, 1 hour or 4 hourly chart, still, the trend which looks little bit on the bearish side. Now, shorter-term moving average as well as medium-term moving average, the stock has been trading below that. That is one part. Second, if we draw a trend line taking up, previous swing low, it has been trading below that. That is also a negative part. Stock has been trading with lower tops formation. Again, that is a negative part. Now 848 around the stock has been quoting. So stock has to trade above 880 to overcome all these three factors. Otherwise, I feel that the stock might try to touch, SBI might to touch 820 and 780 level on the downside. So for a short term bet, it's been considered these are the two level to watch on the downside, 820 followed by 780 to overcome what I have said on the chart front. Stock has to trade above 880 or level.
Okay, and Brijesh, very aware that we have a weekend in front of us, but just from a BTST, STBT perspective, any views, thoughts, suggestions?
Yeah, so as I have told, one stock was Maruti. There are two more stocks for STBT purely on looking the indices, what Nifty has been trading and what the other stocks they have given up. One is AB Capital. Stock has been trading below all the important moving averages, right? 211 the stock has been trading. So one can keep a stop loss of 280, go for a sell side, play for the target of 200, 202. Another counter to watch would be Hindustan. A similar pattern of what, as I have told about the SBI, has been trading with lower tops and lower bottom formation. Important moving averages has been broken. Stock has been trading below that. 647 around the stock is trading. So one can keep a stop loss of 660 and play for the downside level of 630 to 632.
Okay, Sudeep, I'm not sure if you track this one in particular, but Newland Laboratories is flying away in trade. It's up, if we can pull that one up, it's up 15+% in trade. There you go, 17.5% now. Margins getting better. Sudeep, quick views. We have just about 30 seconds, if any, on Newland Labs.
Well, I don't have any specific view on Newland, but overall pharma, I'm extremely positive on domestic pharma business, and that's where they about 25% CAGR. So companies like Mankind, which has 95% of business in India, definitely remains favorite. And anybody having a significant business, domestic business, will do well in the near future.
Thank you so much, Brijesh. Thank you so much, Sudeep, for speaking with us today. Just a couple of minutes to go for markets to close on what has been a rough day on the street. And it's really shown the way markets have responded. I mean, remember, this is a global story. This is a global story that we're seeing very, very important data coming out tonight, India time, from the US. Keep that in mind. Non-farm payroll data, essentially jobs data and unemployment data in the US for the previous month, for the month of July, is going to come in. If it is negative, you could see this worsen. So keep that in mind. Remember, two major companies have come out with disappointing numbers post-market hours. In the US, you'll see that impact as well. I'm talking about Intel and Amazon. Intel is sacking 15,000 people. Now, having said that, what's that doing to our markets? 1% down on the Nifty. The pain continues. We started the day weak. We're ending the day weak. In fact, some of that pain point deepening as we get into close. The Bank Nifty, which was looking like the outliers, also joined the negative party, unfortunately, down about 0.5% on the Bank Nifty. And really, if you pull up the heat map, you're really seeing why and what has pulled the markets down. One, HDFC Bank really cannot do much beyond a point, trying to pull up the markets, but there it is. Divi is doing okay, but it is the auto and metals which are really hurting. Look at an Eicher down 5.5%. Those Royal Enfield numbers for the previous month have not helped at all. Maruti also has seen a dip in sales and exports for the month of July. Same with Tata Motors also has not seen the greatest numbers, and even the results, though in line, the commentary was not something that the street took too much heart from. JSW, Hindalco, Tata Steel, all of them hurting for a couple of reasons. One, I talked earlier in the show about the recession fears and how that will hit demand, but this royalty tax on minerals, which is an ongoing case in the Supreme Court. Actually, the Supreme Court has upheld what the High Court said, so it's not even ongoing. They're hoping for a reprieve. Could be a very big hit. We were speaking with one analyst today who said only in Odisha that the royalty bill for the industry could be 2 lakh crore rupees. So maybe that's why you're seeing metals hurting. But if I were to look at the broader market, and let's pull up the advanced decline ratio, there's pain everywhere. Harsh, why don't you come in as well? There's pain everywhere, and I really don't see it improving too much. I mean, you're seeing that little green worm slightly above, but if you ask anyone who's looking at their portfolios today, they're really wondering what's happened. Let's just pull up sectoral indices for a second before we get to broader markets specifically. And reality is the big loser. Auto, metals, we talked about. IT also just mildly in the green, I would say, is Pharma, that too Divi's and Sun Pharma that have held that whole story up. Everything else looking poised for pain.
Yeah, PSU Bank as well, and IT down 2.5 is painful to watch. Of course, global macro is not helping IT, but why the rest, right? I mean, 3% down on auto, 2.5 plus on metal because of the overhang there. You just spoke about almost 4% on realty as well. So pain is real, especially in some of those broader market names. Let's pull out the BSE 500, try and talk about some specific names as well. Of course, a lot of them buzzing on the back of numbers. PCBL is the one that comes straight to me because yesterday it was one of the top gainers on the BSE 500, one of the top 10 gainers on the BSE 500, continues to be so, second consecutive day. Zomato ruled the roost, of course.
I just want to add, I was seeing a piece, Zomato, yes. Apparently, Dipinder Goyal has made upwards of 1,600 crores today because of the run-up for Zomato. So maybe the district launch has helped him. But yeah, I mean, he'll be ordering the most expensive stuff on Zomato today, if nothing else. 1,600 crore rupees is what DP has apparently made. Yeah, but carry on.
Yeah, and we try to break that down by giving you a bull versus bear and trying to understand what the risks could possibly be of the valuations that have run up 6x almost. From those lows. Let's pull up the BSE 500 again, talk about a few names while we are at it. You also had Suzlon Energy again locked in upper circuit, but Paytm piggybacking on the Zomato run, as well as, of course, having transactions with Zomato as well. So maybe that kept Paytm at play. But not often do you see 2-3 nifty names here in the BSE 500 top losers list. Eicher as well as Maruti make it there today at least. You also have an Imami which is trailing in trade. Birlasoft, third consecutive day in the red, and sharply in the red, 6% down today. And Cummins India, Cummins International not having the best commentary coming in. and Cummins India facing some bit of that wrath.
Yeah, so that's the picture. Just before we wrap, I want to put up on the screen something that Nilesh Shah has tweeted out of Kotak, and it's just giving you a sense of where we are. So listen to what he's saying. He's saying broad-based bull market has pushed valuations in some part of the market. He goes on to say in BSE 500 pre-COVID, 93 stocks traded above the 50 PE trailing part of the market. Now it's up to 2.5 times to 228 stocks. I mean, the valuation concern is a very, very real one. Look at that. The 12-month trailing PE ratio in the BSE 100 and the number of stocks right now, which are in the 50 to 75 range in 2020 compared to 2024. So you have a painful piece, and you know, in the piece we did on Zomato today, 230 years. You need 230 years to make the profits which are baked into the stock today. So yeah, I mean, on Monday, if it's a great day, we won't be having this valuations discussion. So keep that
that's
in
not
mind.
trailing 12 months. Just to quickly clarify, 230 times is the annualized PAT basis Q1 numbers.
Yeah, what Nilesh is putting out is trailing 12 months, absolutely. But
Just
you know,
to
that's all the time we have on the show this afternoon. So from Harsh, me and the entire team, thank you so much for joining us. But stay tuned, a lot more coming up on the other side on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the...
Welcome to Earnings Edge. I am Mahima Vachrajani. One stock that is in focus today is Imami. It came out with its Q1 FY25 earnings yesterday. Revenue was up 10%, EBITDA was up around 14%. EBITDA margins have slightly improved from the 23% mark to the 23.9% mark, and net profit is up around 10%. However, the stock is seeing some pressure today. It's down around 4.8%. But to discuss more about how the quarter has gone by and to break those numbers for us, we're joined by Mr. H. Bansali, CEO of Finance and Strategy and Business Development at Imami. Welcome to the show, Mr. Bansali. My first question to you is that, give us some color as to how the quarter has gone by as per your expectations. What are the kind of trends that you're observing, overall in the FMCG space?
Yeah, the performance is in line with our expectation. As you know, we have been able to deliver a double-digit growth in such a challenging environment across the globe, domestic market and also the international markets, and both have performed very well. Domestic business, the growth is led by a volume growth of 8.7%. And the international business also, the constant growth is at 11%. So all-round growth, and within this also, if you look at, the growth has come from all the channels. It's not that few of the channels and all. So we are highly satisfied. The growth has been very good. And we feel that the same kind of a growth would continue going forward.
Right. Mr. Bansali, for a lot of FMCG companies, the rural growth has been picking up. In fact, there are companies that have said that the rural growth has been more than the urban growth. It overall outpaced the urban growth. So I want to understand is how is Imami seeing the rural recovery in terms of demand?
Yes, this is the second consecutive quarter where trade has also shown a good growth, which was earlier was GT channel was rather flat or declining. And within this, the rural also has grown by almost, the rural channel has grown 5% and GT growth has also been 5%. And on the other side, the new age channels, kind of modern trade, e-commerce, and institutional sales, everyone they've grown around 25% plus. So all-round growth and very inclusive growth from all the channels, all the many of the brands, and supported well by strong summer. So nice growth.
Mr. Bhansali, since you mentioned that, the growth has been supported by the kind of heat wave that we've seen, this quarter, do you expect the same kind of growth to continue in the coming 3 quarters as well for FY25?
Yeah, for the financial year, we expect the same kind of a double-digit growth, and that would continue because the first quarter was witnessed by summer, and then there would be a third quarter witnessed more by winter. And so this seasonality would come in. May have some here and there, but despite this, we expect because of many other steps which we have taken in terms of marketing, distribution, brands, products, and so many things which we have undertaken. And on the top of it, the government has a lot many steps to improve on the rural side. Monsoon is also expected to be good. So all taken together, we expect good growth to come in.
And Mr. Bhansali, in terms of your profits, I was just analyzing your P&L and I saw that your cost of raw material has gone down by 15%. So what is the kind of trends that you're seeing in raw material pricing, and what is the kind of outlook that you're expecting in FY25? And on top of that, what is the kind of margins that you're looking at for FY25 overall?
Yeah, so of late, the costs have started inching up also, but still they are very benign. And we expect a margin improvement to happen in terms of the gross margins as well. And we would be investing behind the brands, and so it may increase somewhat, marketing spends may further increase. But despite this, our EBITDA margins are expected to improve a few basis points.
Can you quantify that few for me, Mr. Bhansali?
I would like to leave at it.
Okay. Well, your A&P spends YOY have gone up by 21%. However, as a percentage of sales, they've remained same. So how is that playing out for you overall?
No, it has increased as a percentage of sale also for the quarter.
Okay.
And for the year, we expect the same may increase a bit based on the kind of opportunity we may witness in terms of the growth. And so, but despite this, as I said, we would be expecting a little EBITDA margin improvement as well, despite investment behind the brand.
Got it. And Mr. Bhansali, your strategic subsidiaries, that is your Man company and the Briller, have been, witnessing significant growth in the past few quarters. This quarter also the sales has grown around 23%. So I want to understand that what is the kind of strategy going forward for these subsidiaries, and overall if you can tell me what is the contribution right now in terms of revenue and where will it go going forward?
So this is again a very important pillar for our growth. Right. And we expect these subsidiaries, and there would be many other who could be added to this kind of strategic investments. So are expected to give impetus to our growth. And currently last year, for the full financial year, it contributed around 4% to our overall turnover.
Mr. Bhansali, one of your competitors said yesterday that they are facing some kind of pressure when it comes to selling of their oil, products. But Kesh King has shown quite significant growth. So I want to understand that, what is working for you, which is not working for others?
Honestly, the category, the discretionary category kind of, and oils also falls within that in this such category. And so, while the market shares have not declined, but otherwise it has that is still under pressure for as an industry and not for only Imami.
Okay, and Mr. Bhansali, overall competition, how is it looking like? Both from the unorganized as well as the unorganized space.
Yeah, competition is there and is there to continue to remain from even the new ad channels, the startups also give a good competition. And now not many channels have also increased. So there has been a lot of things happening across the industry. And we have to keep ourselves appraised of what is happening around and then adapt our realities. And that's what we are doing.
And Mr. Bhansali, just to get an overall view, your revenues in FY24 were around 3,500 crores, right? And your bottom line was approximately 720 odd crores. So FY25, if you can tell us that, where will the number for top line and bottom line go?
As I said, we would be expecting double-digit growth in terms of the top line, and the bottom line also would be aligned to that with some EBITDA margin improvement. You can make out now.
And, overall, we're also seeing that, there could be harsh winters going forward. So, do you already have a strategy in place for your products going forward? How will it play out for you?
So it plays well. In fact, we expect good winters to come in, and we have many of our products which are precisely skewed towards the winter. Maybe kind of BoroPlus antiseptic cream and BoroPlus face washes and other products. And apart from that, the Chyawanprash. So we have good products which are for the winter, and we are poised for a good growth to come in from that season as well.
And you also mentioned that, discretionary spending has remained under pressure so far, and which is kind of impacting the male grooming space. However, Man Company has shown a good growth, but there could be a little more upside to that. So I want to understand that when do you expect some recovery? Considering the kind of budget that this time the government has come out with, do you expect that this discretionary spending will go up?
Yes, we expect the same as to improve and in the next quarters. In fact, we are also independently, we are taking many other steps on improving on our marketing and distribution reach there. So it would improve further from here. But on a channel wise, on a product side or a discretionary sector, it is under pressure. But we are taking all the steps, and with the impetus which is expected to come in from the government, from monsoon, that's going to give a required impetus to this kind of products as well.
Okay, and Mr. Bhansali, overall, from a long-term perspective, we talked about how FY25 will shape up for you. You're expecting double-digit growth. But overall, from a long-term perspective, what are the kind of strategies, new products that you're adding? And overall, also, this is a two-part question. The price hikes that you've taken so far, and what are the kind of price hikes that you're expecting overall in FY25?
Yeah, in terms of this long-term strategy, we would continue to remain in where we are in the personal care and healthcare kind of products. And our bets would be mainly on the Ayurveda brand supported products. And
Right. Okay, I think we've lost him again. The connection seems to be a bit patchy. But yes, Imami is under pressure. However, the numbers have been a bit better than what the street was expecting, in fact, in line. However, net profit was a miss as per the estimates. But I think we have Mr. Bhansali back. Yes, Mr. Bhansali, I think let me repeat the question for you. A two-part question. Your long-term strategy for Imami, one thing. And second, the price hikes that you've taken so far, and going forward, what are the price hikes that you're expecting?
Yeah, so on the long-term strategy, as I said, we will continue to remain where we in the personal care and healthcare business. And we would be, because all our products are based on Ayurveda or Ayurvedic, all our ingredients are also based on Ayurveda. And so we are expert at that, and we would like to remain in the regime where we are. And so far as price increases are concerned, we had been very, very judicious. We had never been aggressive in taking any price increases. Around 2% kind of a price increase is average, is now expected in the current regime. And that also will be very judicious.
Okay, and one last question as to any new products in pipeline that you would want to talk about, and any new segments that you would want to foray into.
We see that's coming out with the new products is always an ongoing thing, and we come out with the new products in general trade and modern and in many of the channels, and but precisely on the digital channels, we come out with many premium products as well. So that journey is continuing and would continue. So going forward, also the same would remain.
Okay, well, Mr. Bansali, thank you so much for giving us those insights on Imami, and all the best for FY25. But with that, it's time to slip into a short break.
Thank
but
you.
do stay tuned. We have lots more lined up on the other side.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome, you're watching NDTV Profit. I'm Mahima Vajrajani. Well, Axon Noble came out with its Q1 FY25 earnings. Revenue is up 3.7%, EBITDA up around 4%. Margins have improved a tad bit, and net profit is up around 4.3%. But to break down these numbers further and to get an outlook on how FY25 is shaping up, we're joined by Mr. Rajiv Rajgopal, Chairman and MD at Axon Noble. Welcome to NDTV Profit, Rajiv. My first question to you is that, I believe that the quarter has been a bit subdued, and this is on the back of course, elections and stuff. But I want you to break down how the quarter has been for you as per your expectations, and overall, how has the demand played like?
Good morning, Mahima. Good morning to you and all the viewers. Look, I think for us, our growth trajectory continued from a volume perspective. We've had a double-digit growth. It split for the two verticals. Paints had a high single-digit growth in volume, and coatings had a double-digit. Look, I think we are executing our strategy. For us, I think the key highlights were that some of our businesses, whether it's marine protective, whether it's powder coating, or even in the decorative side, we continue to see sustained volume growth. Remember, on the decorative side, the volume growth, while it's showing a high single digit, almost a double digit, the reality is we had a 4% price correction at an industrial level at the beginning of the year. So that's impeded, and there was a bit of a mixed change because obviously there are certain growths coming in from certain segments where obviously which has impacted value a bit. But I think that's largely in line with what we've seen compared to the industry. Hence, we were also a bit surprised. We've done relatively better, but we've been really focused